And we're live. Roy, Friday episode. Feels weird. Feels like a Tuesday.
Yeah, it does feel weird. And hopefully we'll get back on track with Tuesdays now that travel for you and I is done for the rest of the year, right? You're not going anywhere?
I can't promise the rest of the year, but I can promise a couple weeks at least.
The nice thing is we're about to enter earnings season. We already entered it with some names as well. And there's going to be a lot of news. There always is in the market between now and Tuesday. So we'll have a episode that's probably more condensed. Tevis, you sent me about like 50 topics. We won't get to all of them tonight, but the way that we'll do this basically, guys, is there's some major sectors that we're looking at and some names in those sectors or some trade ideas as well. We'll talk about some of the trades that we've been making, hence the title for the show. I did two firsts, or two rarities rather, with me, things that I've not done in at least 2 years yesterday. One worked out, one didn't. We'll talk about that. And as always, we'll take your questions along the way. If it's related to the topic we're discussing, we'll try to get those along the way. If not, we'll have the Q&A period at the end. Tevis, how are you doing this new year?
Good. I was just telling Roy backstage, I haven't made any content since I got to Canada. And that's probably emblematic of a deeper problem. I just get busy here, man. I actually came back into work mode and just started off the new year, and it was nice while it lasted. That's for sure.
Yeah. I did some family travels, and I was like out there, like remote in the desert in Western Arizona. It's like a tiny little town, and internet was spotty and news was spotty, and I could usually at night catch up on things a little bit. But it was so nice to kind of unplug, unwind, touch grass, so to speak, although not as much grass out in the desert. But yeah, but I'm glad to be back. I've got like a list of 6 videos I was telling Tevis that I plan to be making. And yeah, it's already earnings season. So yeah, we're going to talk about air tonight. We're going to talk about the AI trade and some names. We're going to talk about some of those with the tariff, the Supreme Court lack of decision, and also some potential trade ideas relating to that. Some stocks that were beaten up last year that also kind of related to trades and tariffs that have some interesting news, and we'll see whether those are worthwhile. So Tevis, let's start there. I think with the Supreme Court. So I'm not going to pop anything up on this, but there are some trade names that I want to talk about. So I guess going into today, 10 a.m. Is a normal time of Supreme Court release as far as decisions. They've talked about expediting. They've delayed before as far as a decision on Trump tariffs. Polymarket at one point was putting almost an 80% probability on the outcome being against Trump. There was a post that went viral, I believe it was on Monday. Several million people viewed and saw it. I actually made a video that talked about it too. But he was predicting that Friday would be the worst day in a long, long time. It'd be terrible and chaotic because, and there's one part that he was right on, the market hates uncertainty. And trying to figure out how the repayment works. Now, there's some things in place already for this, but it would still be kind of a messy, confusing, chaotic process. My thoughts going in was I was thinking they'd probably rule against Trump, but I actually thought it would be a thing that the market would really, really receive well. What were you thinking going in, Tevis? And did it surprise you, their lack of decision?
I thought the actual day itself would be kind of a contrarian signal because of how overblown people were making it out to be. I also saw that post where he was saying like it's going to be the next worst day since the Great Depression or whatever. And I think anytime you have a catalyst like that everybody knows about, I think it's a contrarian signal because like it's priced in to some degree. I also do think the Supreme Court is going to rule probably against Trump, but definitely not to the degree to which, it'll make the market fall substantially. I think a lot of that downside coverage has been priced in. And also, I mean, Trump came out, when was it, today or yesterday, saying he has a backup plan, whatever the Supreme Court decides. So I largely see it as a nothing burger to that degree, or definitely maybe not a nothing burger, but not to the same degree that like it's going to crash the entire market. I don't love the uncertainty of pushing it out to next Wednesday, because it just looms over us for longer. I would have rather had a red day today and it's over and we carry on. as opposed to getting pushed back. But at the same time, like I think I, there must have been a seed of doubt that this thing was going to get pushed back, because it's like the new year just started and governments are slow and it's not the most efficient process in the world. So again, I don't see it like I don't see it as a massive deal for the markets from a macro perspective. There's so many other tailwinds that are more secular than this. Then I think this is going to be one of those short-term fluctuations.
Yeah, I think so too. And I mean, like, except for possibly one thing, I was thinking like that if the decision was made really either direction, the market would be decent. And I actually thought if the Trump tariffs were removed, then I think the markets would like it overall. It's really good for a lot of companies. And if you look back, and if you doubt, like just look back in April, look at some of the companies that were the most banged up. And so that's kind of where I want to take this conversation is what are some names? And so let's assume they make a decision Wednesday or next Wednesday or whatever it is. It's going to come at some point, and they do decide against Trump. What are some names that potentially stand to benefit as a short-term swing trade? And so just without too much preamble, one of those things that I have not done for at least 2 years, it might have been 3 years as well, which I did yesterday, was I bought options, naked options, call options with a very short expiry. It was a 1 day to expiration on Apple. And the reason why I bought Apple, Tevis, is not because I love Apple. It's not because I want to go long Apple. It's just it was a trade idea. But I figured if the decision came out, now it may not play out. Sometimes you're right. Hey, the decision came out and it played out exactly like I thought, and the stocks move in an opposite direction. That absolutely could have happened. So I only risked a small amount of money. And for whatever reason, when I bought the Apple, 1 DTE anyway, the price rose by like 70-something%. So I sold and took some profit. So I still took a net loss because those things collapsed when in the morning action. But essentially, a couple of things happened. One is you can look back in April and see the volatility introduced, especially in Apple, because the tariffs really hurt them immensely. Like at one point, if you recall, they were flying a massive amount of their products over to India to avoid some of the tariffs. And it's like, okay. Tim Cook also has reiterated a number of times, including the last earnings, that they have a $1 to $1.5 billion impact. I believe that's on a quarterly basis from tariffs. Now, things are a little bit better than they were, in previous quarters. And so, and he continues to get asked about that. But I was like, okay, what name just seems like it would be easy in the face of this, easy beneficiary. But also with Apple, there's another thing going on. It's actually sold off it's at one point today, it had sold off 8 trading days. I don't know if Apple finished up. It was up slightly before, so it might have broke that. But I'm like, okay, this downtrend looks like it's ready to reverse. And also it's functioned as a flight to safety. So even if, the market doesn't like what's going on, oftentimes funds will move into Apple because it's been that flight to safety stock. So I was like, I could still lose. It might not work. I'm only going to risk money that I can afford to burn. And it did not work out. But that was my thought off the bat, was Apple. So Tevis, what are there any names that stand out to you that like you think would really benefit, and would you possibly have to think about doing a swing position in the event of the tariffs being repealed?
I mean, I think the first order effect is companies that benefit from or that were hurt from tariffs that rely heavily on imported goods. So, Nike was one that was coming to mind, actually, because if you remember, there was this like whole thing around tariffs with Vietnam or whatever, and Nike fell quite a bit, and Nike's already been beat down. So this might have been a positive catalyst for them to start a turnaround. So that was one that I was thinking about. Lululemon as well. They're historically sensitive to any trade barriers due to their global manufacturing. So that's the first thought that came into my mind. And then, just your typical retail giants, right? Like the Costco's, the Walmarts, the Targets of the world. All of those, I would say, would catch a bid. But again, I think that the policy will get somewhat reversed, but not fully to the point where he cannot maneuver around anymore. I think the Supreme Court is going to, like, they're stuck in between a rock and a hard place because they can't really side with Trump, because then they remove all the power, from themselves. Like the president can just act unilaterally, and it kind of defeats the purpose of having the multiple branches. And then they can't really completely shut it down, because I believe there's another stipulation that I was reading about where it basically forces them into this very temporary state where they would oppose the tariffs that he implemented, but they wouldn't oppose the concept of tariffs if gone through the proper channels in the future. And so I think knowing that is what makes me think that it's going to be somewhat of a nothing burger, because again, he already said, like, I have plans to circumvent it and pursue it, even despite the position. And he's been tweeting quite a bit actually in terms of changes, which we're going to talk about, because we talked about the home ownership piece, the defense stock piece, the tariff the circumvention piece, all of this geopolitical stuff that he's been tweeting about with regards to Venezuela, Iran, and others, Greenland. So it's been a busy couple of weeks, let's say. But yeah, back to the actual plays, I would say Nike, Lululemon, I would say Walmart, Costco, maybe logistics like FedEx, UPS could also catch a bid. But yeah, I honestly, Roy, like if you want like a degen little trade, I would probably look to trade like DJT. Because if it's like that stock really trades entirely on Trump's political narrative, and that would be trading down if
puts.
Yeah,
just to be clear, I was like, I'm going to say puts just in case it's not clear, but yeah, and of course we're not giving financial advice here. I know you have a thing that you'll throw up to, not financial advice, but yeah, and other people have made some good names too. Adidas, Elf, Amazon, Baba. So the other thing like that I want to add there too, we don't know if it's repealed, what exactly will be repealed, and one of those things that I think a lot of e-commerce names would really benefit from, but it also might not happen, is the de minimis aspect. So it used to be that there was a certain amount that if it was valued under that amount, then they said, don't worry about the actual taxes. That was removed initially from China corridor in August, and then for every single other place in the world in September. PayPal has talked about the headwinds on that. Another number of other payment companies as well. And yeah, Alibaba, Amazon, and so forth, Walmart. I mean, all these, but especially e-commerce stuff, it really had, took it on the chin. And that was one of the reasons why payment names were struggling so bit. So as far as tariff stuff, we'll have to see how it actually play out. Could be that they keep things instated, but either way, I think the market will like that certainty. I was actually a little bit surprised that it rallied up anyway, but we are in a bull market. Now, Nike has a couple of things, information, and I know we keep an eye on this. You're not in Nike, right?
No, sir. I am not in Nike.
And apparel is a hard one for me, but they came out with these shoes that were developed by their Mind team. I believe it's called a neuroscience. And I saw a video that talked about, how comfortable they were and everything. It's so different than anything that they've done in a while. It wouldn't shock me if we see traditional Nike where they're like, hey, let's get these shoes on some, famous basketball players and athletes as they go up to their, big event or whatever it is, or walking back. And I don't know. I think Nike may be back. The other thing that's happening with Nike too is more insider buys. And, I'd never really worry about insider sells that much, except for like rare times. Insider buys, though, they're always bullish. Now, it doesn't always mean it's a buy. It doesn't always mean that things work out. But man, if you were to pick like just one trade signal, insider buys are pretty good. So are you interested in Nike at all, even as a swing trade potentially benefiting from tariffs being repealed? Or are you like, hey, none for me?
I am really interested. That's the toxic part is I don't know. Like if I had a more boomer type of portfolio, I would probably buy Nike here and just hold it. I think that the brand is going to do fine. I think the insiders, buying is definitely a bullish signal. And then that they have new product. This was the Google Trends for Nike Mind. Obviously, this is not going to show anything different because it's a new product with a unique name, but it's holding up over the last couple of days, which is kind of interesting. So I think that this is going to be a big thing. I also saw, I mean, this is kind of joking, but like the full tracksuit that Maduro was photographed in completely sold out in all sizes. And it's just like, man, what kind of a world do we live in? It's just crazy. So I don't know.
Dress like a dictator. Yeah.
Yeah, exactly.
Yeah, and I know some people are saying, no, those are a joke, uglier Crocs, but I don't know. Like, okay, let's watch this video. I've got it on tab mode. It should play the volume, but just a minute.
Okay, we're not going to lie here. You can definitely feel it sort of pop. This is the Nike Mind, the first ever neuroscience-based footwear platform to come from the Nike Mind Science Department. In simpler terms, Nike is using neuroscience to further unlock awareness, focus, and concentration, which can lead to better performance. Debuting on January 8th, the Mind 001 Mule and Mind 002 sneaker features this unique sole that consists of 22 independent foam nodes that impart the feeling and texture of the ground. Nike sent us both pairs to test out. Off the bat, the comfort is top-notch, and with each movement, you can definitely feel all of the nodes. And we can't really describe it, but it feels like a small popping sensation when you press down. This is, of course, the Mind 001 Mule, and we see it as a very popular pre-game and post-game option for focus and recovery. The Mind 002 has a classic sneaker fit and build, so you feel the underfoot nose even more because your foot is a little bit more locked in than a Mule. Whether or not I feel more focused and aware, time will tell. Both the Mind 001 and 002 will release on January 8th in men's and women's sizing. The 001 is $95, while the 002 is $145. Head to sneakernews.com right now for a...
Yeah, okay. So here's the thing, guys. The Google Trends is at record highs because it just released yesterday. And I would expect these things to get sold out immediately, like that comment said. Yeah. Honestly, here's my take. Whatever. People are saying they look stupid. People are saying that the Cybertruck looked stupid when it first came out. People will buy these things.
Crocs, too, they were saying the same
thing. Crocs look stupid AF, and they still became a fashion, symbol, So I think if the actual comfort is there, then the form factor is going to change over time. But that technology is something that Nike has leveraged consistently over the years to stay at the top of the game. Because I remember they had the basketball shoes in the early 2000s with I think it was called the Shocks technology, where it was like they were basically like springs essentially. It's a very bad description, but essentially they had a technological advancement or a breakthrough that led to their shoes being more comfortable than the competitors' shoes. That, alongside all of the endorsements that from celebrities and athletes and whatnot, led to them creating this household name and with basketball shoes and whatnot. And so the bull case here is if this ends up being another version of that, where they can leapfrog their competitors with this, and they can make running shoes, they can make basketball shoes, they can make the therapeutic slippers. Now, I don't necessarily know how that's going to materialize or how impactful that's going to be for the business. It's kind of cool, but again, I'm not here saying that this is going to revolutionize their business. It's just a new product launch. It could be a complete nothing burger. But that's the other side of the argument there.
Yeah, as far as revolutionize, agreed. But what it can do is really shift the narrative that Nike is no longer relevant, that it's dying, that they've completely lost their way, depending on if this gains traction or not, pun intended. Early read, and it's too early to say because, I mean, like you can say the same thing with Apple, that like Vision Pro, amazing early read, and look what they are right now. But if we're like looking 2 weeks out or 3 weeks out, and you're seeing people like pay $500, $600, $700 and through second-hand parties for these, you're seeing a lot of traffic and demand and interest, and you're seeing them all over social media. By the way, this type of product, you just want people like to be aware. If people are making fun of it and saying it's the stupidest thing, well, if there's some, not, you don't want like 100% of people saying that, but if there's some that are like, no, this thing is sick, that's exactly what you want. And I think that's what they have. And like, frankly, like these are not shoes that I would wear, but the slippers, the 001s, they look comfortable. And so I would like, because they're so different and everything. If I was in a shoe store, I wouldn't really be interested in these, but I'm like, I want to try on a pair just to see what they feel like.
Yeah.
And that's what Nike really needs. So I'm staying on the sidelines. I'm not interested in getting on. Well, the other thing too, like that I'll note is as yields drop and as free money drops, I think there will be a bit of a rotation into some of these dividend names. Nike has a pretty good dividend too. I'm interested enough that it's a little bit on the radar for me. So we'll have to see. My daughter loves Crocs, but yeah, they're not a thing for me. All right. So one of the other names that I think would really benefit from the tariffs being repealed, although it may not act like it. The stock has been performing terribly, but they had some major news and also a little bit of minor news as well as PayPal. Mm-hmm. I know PayPal.
Speaking of investments that go down.
What's that?
Speaking of investments that go down.
Yeah, it doesn't go up. It's flat to down. And when we get a little bit closer to time, I'll have an earnings preview and what I'm looking for. I don't think that I'll add to my position. I exited all my options in my my non-tax advantage account a couple of months ago. I may exit options completely. I may take some shares off the table. I may completely exit as well, depending on what that Q4 looks like and the guidance and how they talk. But this is one of those things where they really need to talk about more. Now, they release press releases and everything, but if you were just to follow the earnings, you would barely even know that they have advertising at all. And this should be the easiest layup for PayPal. They debuted this they talked about the transaction graph before. So some of this wasn't necessarily new, but some of it was. That's the best image. Here, let's do that. And so basically, it's the idea of the transaction graph. And so they made this demonstration, Dr. Mark Rather and team, and basically illustrated what this actually looks like as well. We knew a lot of the advertising aspects. They also talked about a lot of the early wins and the way that this is set up. And so like Ulta Beauty was one of those that they had as a case point. Sephora previously, they talked about the importance of that. Previous to this, I think 2 weeks ago, Dr. Grather had said that the on-site Venmo ads were completely sold out in the month of October, or maybe it was November, but it actually been up to October. That's what it was, I believe. And so like things are actually ahead of pace for one thing that's going well in PayPal, but we don't know like the revenue, we don't know the annual run rate, we don't know internal expectations, and so this is great. By the way, another partnership too that they announced was with Microsoft Copilot for agentic pay, but that's so far away. This is one of those things where they have to talk about, how they're doing with the guest checkout, how they're doing with PayPal ads, how monetization continues to go as far as Venmo, and of course, branded has to get better as well. If they sandbag, if they don't talk about anything new and working, they focus all on the macro, I'm going to reduce maybe quite a bit.
Man, here's the crazy thing that blows my mind. It's that PayPal is trading for the same price where it was trading back in 2017, guys. 2017. Like literally when I started investing for the first time ever, until now, PayPal has stayed the same price. I mean, it's done like a full round trip up and down, but it's still at the same price in the 50s, high 50s, which is staggering, absolutely staggering. It's been through multiple CEOs, multiple initiatives. I don't know what to even say for PayPal at this point.
Yeah, Duck has said it, other bulls have said it, and we're frustrated because it's not just it takes time, or it's macro. It's leadership has made some mistakes in communication. They've made mistakes in setting the narrative. They've made mistakes in not setting any goals or checkpoints so that we can actually measure them. We got to see results. Yeah, I don't blame you.
Let me ask you this. I know I'm not going to make you choose between Shulman and Chris, because I know that Chris is way higher on your list than Shulman is. But like when he first started to now, how has your perception of Alex Chris changed? Is he just like, he's misunderstood, but he's still executing and the market just doesn't want to give him his flowers? Or is there things that you want to nitpick based on what you know now that you didn't know when he first started? And so where's your head at?
I'm mostly going to give him high marks. But ultimately he's a CEO, so even some of the things that I don't like, he's ultimately accountable. So I think that he's done the right thing in getting rid of and completely revitalizing the C-suite. If you look at the talent that he's hired, now some of them I don't know at all, but a lot of them, when I look into them, like these are incredible and absolutely the right fit. He is a talent magnet. He's good at identifying talent as well. He is building, for the long term, which PayPal hasn't done for a long time. He is actually improving that back end, that tech stack, and he's brought in the right guy from Walmart as well to lead that. Jeff Seeley from Block actually was a great hire too. Obi Abisai Williams over, that's operating in the MENA region, like just great hire after great hire. Dr. Grather I've talked about with PayPal ads, like he built Uber from scratch. He built Amazon pretty much from scratch as well. Now, the issue I think has been communication. Alex is now not so new in the CEO role, but he was brand new. He was, second basically in command of Intuit, effectively in charge of small and mid-sized businesses. So I think he's great at leading a team. He's great at organizing a business. The other factor is PayPal was far more of a mess than I think anybody, including Alex Chris, expected. Dan Schulman, he was running the ship into the ground. And, I'm very glad that he's gone. And I wish Verizon shareholders well. I will never be one of you. But the communication is, the shock the world comment. Some things in earnings that were just not said quite right. When he's talking like this, he's phenomenal. When he's reading off a script, I mean, it's a little bit harder to do that anyway, but he could probably use some coaching lessons on that, or just look at what other CEOs do. And then, just kind of controlling or setting the narrative. They don't really do that. And then the guidance is just, it needs to be more clear for like what PayPal is actually expecting, doing, and building. Investor Day was nice, but we need more than just like a once every 5-year type of event. So, yeah. So I'd give him, like somebody asked me to give him a letter grade. I give him a B+, because it's kind of grading on a curve, because if he inherited like an actual healthy PayPal, that would be one thing. If he came in at like 2020, he didn't. So, but that's not enough to keep me interested. Like if I hear transition year 3.0, that's too long. Sorry. Because who's saying that it wouldn't be year 4, year 5, year 6? And frankly, by the way, there is a risk if share price continues to remain depressed of there being like an Elliott coming back in and being an activist investor and getting him removed. Honestly, I think Alex Chris's vision is going to absolutely work. But if he's removed, I think PayPal is just done. The best thing they can do is break up the company, sell the parts, and get out. And I'm not excited to be around for that.
Really? There's nobody else. Like you're saying, if Alex Chris is removed, the company is done. There's nobody else who you think could breathe some life into PayPal. I mean, like it's very difficult, right? Because like we saw the OpenAI partnerships, we saw Microsoft, we've seen all of these real initiatives that they're doing, and it's clear that they're trying their best to innovate, but the market just does not see that, nor value it, and it seems as though like there's nothing seemingly that can happen, no partnership that they can do. Other like if the U.S. government takes a stake in PayPal, and if Nvidia takes a $10 billion stake in PayPal, then that might move it. Short of that, nothing is going to move this thing, it seems.
Well, I don't necessarily think. I think that because expectations are so freaking low, it's mispriced. Like things can be mispriced, and you can still think it's just not as high of an opportunity as I thought. That's where I'm at with PayPal. I'm like, it's stupidly cheap. The buybacks are going to work. The free cash flow is going to be insane. That's not enough to get the market's attention. It hasn't been in the past as well. And so what has to change is the narrative. Advertising is a big piece, but if we hear nothing about that, we hear nothing about anything else. Yeah. So as far as replacing him, my issue is like, you're basically replacing him mid-turn, mid-pivot in PayPal. Maybe the next person's like, nope, we're not going to do that. We're going to pivot back the other way. Well, then you're looking at another 3 years, not necessarily a lost time, but this is a PayPal that has to get their footing, has to continue to innovate and build the things that are next, including agentic commerce, which is pretty far out. And if the next person coming in, it just creates more uncertainty and chaos. It would take whatever vision that they have, it'd take a while to execute, and it may not even work. yeah, I think they should just break up the business at that point and sell.
At the same time, sentiment can change pretty quickly. So you never know, right? It can. I think if it breaks a couple of key levels, retakes 100 again, all of a sudden people will be thinking, "Oh my gosh, this is the deep value company that is on their way back." So I've seen it happen time and time before with previous companies that we thought were dead in the water, and they've come back. And so I think it can happen with PayPal. It just like it's been absolutely flat from 2022, and now we're in 2026, flat. So
yeah. If it was just the share price and they're doing all the right things, I wouldn't be considering exiting, but that's not the case. And I'm always going to be honest with, anybody on here, what I'm thinking. Doesn't mean that I'm right. But I've also not, I'm going to look at quarter four. If I had to decide right now, I'd exit all my options completely and probably trim maybe 25% of my shares and hold the rest. Just because, I think the downside is pretty limited, but the upside is not maybe as pronounced as I thought. We'll see. Anyway, let's not talk anymore about PayPal for a bit. But related to stocks that are down, we talked Nike, we talked PayPal. This list came out. Well, it's not original necessarily to Fiscal AI, but they posted it and got my attention. These were the 10 worst performing stocks in the S&P 500. And so some of these are very familiar names. So one I was even in for a swing trade. I think Tanner was briefly in the trade desk. Fiserv was well talked about and so forth. So out of these, and you can add PayPal and Lululemon to this, if you are forced to buy and hold one of these for, let's just say 2026, not necessarily 5 years, which one would you most want to hold as a turnaround?
I have no idea. Deckers has Uggs, right? I'm pretty sure. And Lulu, yeah, the apparel's been dead. Trade Desk seems interesting. I don't know why they're down. I'm sure there's a great reason. I don't follow Trade Desk. My gut is saying, Trade Desk or Lulu. I think Lulu, similar to Nike, right? Like I think they've established themselves as a first mover in their core staple and their core target demographic. I'm not sure that that's going to, I know like Aloe is making a big move and, all of these other ones, but I think Lulu is going through that part of the cycle where it's seeing the drawdown and it will recover. And I say that knowing nothing about the business or the financials or the reasons why they're down. But Trade Desk and Lulu is where my gut would go. And then maybe Deckers for the Uggs push if there's something new. Because like I'm just going off of the sort of viral sensations that captured the sort of cultural attention, similar to how Nike is now with this new product, right?
Yeah, so since we're adding Nike and also PayPal to the list, if it was just a 1 year thing, probably the Trade Desk and then maybe Nike. Very close. Trade Desk is down. They were priced at an extreme premium. I thought above what it deserved, although it's I think a good company. The slowing revenues, and then there's fear as far as competition, especially from AI. Like Zeta is one of those competition names. But if it's a 1 year trade, when it's this beaten up, I think Jeff Green is a very good CEO. And we're looking at midterm elections, which is really good for advertising. I would pick that one. Now, 5 years out, I think Fiserv would be pretty interesting. It's in the middle of a turnaround, and I don't want another one of those transition plays while I'm in PayPal and the transition it's taking forever. But that's one where I don't see being replaced in the next 5 years versus, I would need to dig a little bit more. But yeah, Nike would also be very interesting too. Just a lot of insiders, a lot of major investors are trading, especially if the tariffs end up going away and being refunded. I mean, that's a nice thing for Nike Plus to shoes. So it's a toss-up between the Trade Desk and Nike for me, though.
If Nike were to be added to this list as well as PayPal, I would probably pick Nike above, out of the 12 names. Because quite frankly, like I do think that it's going to rebound. It's just a matter of to what degree and how quickly, but it's for similar reasons, right? Because the reason why I would pick from a gut reaction Lulu is the brand effect, and Nike has an even bigger brand across a wider demographic of people than Lulu does, even though Nike is not on this list. But if it were, that would be the number one pick that I would have.
Yeah,
and
that's
no,
fair.
I would not pick PayPal. Sorry, Alex Riss.
And honestly, if it's a 1 year thing, I wouldn't pick PayPal either. I don't know until Q4 really what to expect for this year, and I'm not just not going to do that. So yeah, I mean, Olympics is another good point. So
yeah, man, Nike's looking interesting. I kind of want to put a list of like, hey, all the catalysts. And
I might. Yeah, I'm very far away from buying Nike, but I might have to just pay a little bit more attention. So,
well, even as a swing trade, if you want to do like the whole social arb playbook of looking at I have this email alert that I get on a weekly basis, and it's this guy that he aggregates all the apparel search terms that people are searching on TikTok, and so every single week I see stack ranked what's the top mentioned thing, and it hasn't come out yet this week, but when I see it this week, I'm going to be looking at where Nike sits on that list relative to their baseline, because if I'm seeing a lot of TikTok chatter about Nike, and if I'm seeing a lot of Google trends about Nike, then I probably will take some type of position in Nike as a swing trade, simply because I don't necessarily think that, well, let's take a look at Nike. I don't necessarily think that the impact of this new product is fully absorbed by the market. And I want to get ahead of that if it is in fact a big deal. So TikTok mentions of like people making hauls and reviews around their products of the new Nike sneakers, as well as Google Trends, I think is going to be the canary in the coal mine there a little bit.
Yeah, that's fair. All right, so moving on to the next topic, let's talk about AI specific. Several names, including Air Test Systems, Amazon, and so forth. This is one of those things that I thought was a really interesting post that came out. Seth Golden pointed it out. I don't believe that this was originally from him, but it's basically, a lot of people are calling AI bubble this, AI bubble that. I don't think so. And oftentimes, like in a bubble, you'll see more of an inflation of PE, which is not always a bad thing. That'll happen occasionally in advance of what they see as major growth. And that's what you saw here, an extreme change in forward PE, which, is priced into the stock and implied, versus what we're looking at here in over the last 2 years. So this is like a 2-year average. 0%. Valuations are flat as far as a change in forward PE for tech. So what this signals basically, or for the ratio there. So what this signals to me is like, hey, what's happening in the tech space, and tech has been performing very well. A lot of people are saying, hey, there's going to be a pullback, including somebody that works for Fundstrat in early spring. Man, this does not look bubblicious at all. In fact, it's just they're improving, and the stocks are going up because they're posting real results. It's not just speculation.
Yeah, absolutely. And there's so many people that are saying, we're in a bubble and the market's overheated and all this, but there's so many contrarian indicators that point to the complete opposite. And we still have a lot of tailwinds upcoming in 2026 with not only the AI trade, but I think the market as a whole. And so I remain confident that 2026 is going to be a good year. I'm not sure if it's going to be a good year to the degree that 2025 was, but I think that we're still on an upward trajectory.
So just to explain this is the forward price to earnings ratio. So when you see this go up, it means the stock price has gone up immensely. Earnings has not. And so that it's basically the multiple increasing and expanding. If it does it like this, yeah, you can say either there's massive growth coming that it's forecasting that's not here yet, or it's a bubble. That's just not happening here. Mm-hmm. Interesting. Yeah, Rocket Lab's done really well too. All right, so a couple of other AI related stuff. This was interesting as well. Elon Musk company XAI had just officially announced that they've raised $20 billion. We know quite a few of those investors as well. Nvidia is certainly all over XAI too. They're in everything. So Grok, like if you look at LLMs and everything, it's been interesting just to kind of see this play out. It seems like Gemini has gained a whole lot of traction. Like it's verifiable. You can look at downloads and usage. Grok has performed well as well. If you look at the LM compared to OpenAI recently, this actually concerns me a little bit, Tevis, because we've looked at this before. That I would say Nvidia is really central to everything in the AI trade, but OpenAI is really close to the core too. And if OpenAI stumbles, falters, is kind of left in the dust by their models, it doesn't mean the AI trade is over or done or anything like that. But valuations may be too high, especially in the face of an OpenAI that is no longer getting that massive ramp, that massive growth that they were expecting and guiding for.
The problem I have with OpenAI is that they now have this safety net where I wouldn't say too big to fail, absolutely not, but they have been backstopped by so many different entities that if OpenAI were to significantly draw down or slow down in terms of their growth, it would drag so many other names with them from the investments that other companies have made into OpenAI. In terms of Grok, I think 20 billion is a big, meaty number. But at the same time, we're still in the early innings of that race, which, I mean, look, I stand by my original assessment that we, I think, agree on, that LLMs are largely going to be commoditized, but it's still TBD right now. Gemini is in the lead for many things. I use it as my daily use. I moved from ChatGPT to using Gemini. Before, earlier in the year, I was using Grok, and once Grok 5, releases the new model, whatnot, I'll probably be using Grok again. So I think it's that race that they want to front run. Now, you could say like, oh, well, they're opportunistically raising because valuations are going to be commanding a premium right now, which they won't be in later on in the year. I don't think that that's the case. I think they're just raising money because they need money because they want to compete. And Grok is still very small in comparison to Gemini and to ChatGPT. It's like an order of magnitude compared to ChatGPT, even Gemini.
Yeah, I rarely use Grok. It is, for a while, it was terrible. Now it's actually pretty good again. I don't know what changed necessarily there. Gemini is actually maybe becoming my favorite. I find myself reaching to it first more and more, but I pay for OpenAI. All my stuff's over there. There may be a big switch, by the way, going towards Google over this year, where people finally say, okay, the difference is big enough. Let me switch over my paid service, but we'll have to see. Related to
Google's at all-time highs too, right? Google's breaking 330. That was a pretty clear trade in 2025. One of the best performing, I think the best performing Mag 7 in 2025.
It was, I had hesitance towards it just because they get most of their revenue from ads. I saw more weakness than actually happened as far as advertising. The rest, I was like, hey, if everything else Google was a separate company, I would buy that easily, just at the ask. That wasn't the reality we're in, so I missed that one. But yeah, if Nvidia over this next week stumbles a little bit more and Google stays where it's at, or Google rises and Nvidia stays put, Google takes over as the largest cap company, publicly traded company in the world. Which is, if you told somebody that in 2025, they would not have believed you.
Right. It's interesting though, Roy, because picking off of that piece that you highlighted initially, the fear was that the prompt-based LLMs were going to replace search, and Google, as a result, was going to have their ad business hurt, and it was not a buy, it was a sell. But I was actually on SimilarWeb a couple of days ago, and I was looking at some website traffic metrics for SoFi, just out of curiosity, leading up to their earnings. And they have this entire section on SimilarWeb, which is like LLM-driven traffic. And it was in that particular segment of redirects, it was the biggest component for SoFi's traffic. I can see if I can pull that up, but still a fraction, because organic is number one, and then like paid search and all this stuff is like where they're mentioned in blogs and whatnot. But LLMs are pushing people to certain products, certain articles, certain blogs, and they have a level of trust there because it cuts through a lot of the noise and it reduces the decision fatigue. If I ask Gemini, I asked Gemini, for example, hey, I want to get a friend a gift because it was their birthday. And I said, this is, a couple of things about them. This is the price range that I'm looking at. And it gave me a generic, like, hey, here's A, B, C, and D of what you can get. And I said, okay, great. I want to get C. Where can I buy it? And it just gave me links. And so that cuts through all the noise, right? I don't need to go to a YouTube video to see the product reviews. I don't need to go to search the actual pages that are indexed. I just get one response, and I click on that one response, and I would imagine that has a much higher click-through rate and a much higher conversion rate than me paying to be at the top of Google's search indexing on page 1, for example.
Yes. Yeah, I think it'll be interesting to see how that evolves this year, but I think it'll be a lot more clear what's going on. Another related piece to Google, but also applies to AVGO, Broadcom. I know Sigig's going to be excited that we mentioned that, and anytime we do. Not a well-covered retail stock. You traded Broadcom last year. Are you in Google, Tevis?
I am not in Google, nor am I in Broadcom.
Okay. 2027, Citi also estimates Broadcom's customer AI accelerator revenue.
Can you read the original?
Yeah, my bad. Broadcom's custom AI accelerator revenue is projected to be as high as $50.5 billion in fiscal 2026, up 3.5x from 2025. I believe they do a different fiscal year than calendar year, is why it says that, by the way. With Google accounting for roughly half of that total at $25.8 billion, followed by Anthropic at $20.9 billion per Citi. Definitely showing a lot of demand there. And then 2027, Citi also estimates Broadcom's customer AI accelerator revenue will double again to $100 billion, with Google contributing half at $50.1 billion, along with $20.2 billion in revenue from its deal with OpenAI. I mean, at this point, I think Magnificent 8 should be a thing, or if you need to remove somebody, remove Apple. But Broadcom is killing it. And I need to actually look in this company a little bit more. So I say that from time to time. I said that with Micron, and then Micron went, up and to the right. So, but yeah, they're very well positioned in this AI trade. Problem is, I don't want to hold 50% of my portfolio in AI trade, because those are high beta names. Even Nvidia is a high beta name. So,
yeah, I think I really enjoyed holding Broadcom for the short period I did. I see Sigig says he sold a lot of Broadcom, close to 400, after holding for 10 years, which, I mean, Sigig's a multi-billionaire, apparently, because Broadcom has had a terrific performance.
Congrats, man. Copy on you next time.
Congrats, Sigig. But Broadcom is really interesting, right? And I think this AI trade is widening, if I can say that, where the main names that we were talking about a year ago were the top 3 or maybe top 4 names that were tradable, right? Like Nvidia, for example, right? Everybody now knows Nvidia, but now it's Micron, Broadcom, all of these other complementary names in that same ecosystem are all catching a bid as well, because they demand it. Fundamentally speaking, they're doing so much growth in terms of their revenue, right? So I think it's just further confirmation of that previous chart that we're not in a bubble, because there's still an overwhelming demand for these product offerings and for these services. And the underlying models are only going to get better in 2026. I was even when we redid the thumbnails for Bootleg, I looked back, the cartoon thumbnails that we had, that was back in May. And now we have hyper realistic thumbnails. And it's only going to get better from here, right? Because the demand is still there. The use cases are widening. The actual addressable market is improving. So I think Broadcom obviously stands to benefit immensely, but so too does Google and all the other players that leverage them.
And Air Test Systems that we'll talk about in a moment too.
Yeah,
Amazon's one of those as well.
You, Roy, have to do a stock tank for us with Air Test Systems, because I think a bunch of people made some money on that. And even though they missed on their numbers, I watched your video. I thought that was very well done around their forward estimates. So definitely take us away with a little segment on Air, and you have to now sign up for a stock tank.
Yeah, we'll definitely make that happen. I put the bug in Tanner's ear too. Basically, they missed the numbers, like you said. The stock, for whatever reason, before earnings, it's just a micro cap. These things will be volatile and they'll move like crazy. And by the way, Tevis, well, in case you guys don't know, this was my gift to Tevis this year in the competition. Right now, Air is actually number 2. It's gained quite a bit this year. QXO is just doing great things. So, Steve, thank you for that gift. And Brad Jacobs, we trust. But I got to learn more about that company. But anyway,
so two little things. Number one, Air Test Systems is $800 million. It is under $1 billion. So this thing can run like crazy. And the second thing is, I not only bought the $100 I was supposed to, but I also bought some calls for Air Test System, which I'm already up. Yeah, I'm already up like 30% on those.
Nice,
and I don't know if I should. Well, I'm probably going to hold them because they're 2027 calls. But yeah, sorry, keep going.
Yeah. No, I don't even have any calls. I've just bought straight up shares at this point. Okay, so just as a preamble, because I don't want to go this video and forget to mention this. The second thing that I pretty much never do, and I've actually never done this before, with the exception of when I had to get out of some covered calls that were underwater, needed just funds temporarily. So I had where it was a margin for like a minute because I had to move things around. I don't go on margin other than the free $1,000 margin that Robinhood gives me. That's such a small amount of my account. I don't really care. I went on margin, like real margin, to buy more of this dip, and I don't do that. There's a couple of reasons why, and I'll talk about like the Air specific piece. The other is I actually have money that's coming in next week, and I'm like, I can at least go on margin. Like it's already in transit. It just check SoFi, sent to Robinhood. It takes time to actually deposit in the Roth. And I'm like, let me get what I need to get right now, or at least get half of the amount of Air that I want. I saw enough out of this earnings call to bring Air, I thought about it before, up to 10% allocation. What that basically means for me is it's a very strong conviction. I think if I were to rank stocks that I've been trading at and pounding the table on in the past, like in order, I would say Palantir was first and foremost, strongest conviction. I was 90% Palantir at one point. Robinhood would be number 2. And then number 3 would actually be Air, close to SoFi. I think it's actually a little bit above SoFi.
Wow.
And I'm very bullish SoFi. PayPal also, big mistake. So I don't always get it right. Don't follow just, if you're interested in this name, do your own due diligence. It's not that complicated, the company. But so just to set things up, we'll talk about the drop. I don't want to spend like too long. If you don't believe in the AI trade, this is not the stock for you because that is largely what's being priced into the stock. I know it's saying 21. It went up like 16% today. From where I bought on margin, I'm up like 20-something% just on shares in a day, which is like, I like that. And I don't plan to like just take my gains on that. It's when the money comes in, it's like I'm going to get out of margin and I'm going to also complete my buy on Air. I may actually buy options at that point. The other thing too is, in the past, actually, let me close this and bring up Robinhood Legend. Actually, I'll do Fiscal AI. That'll be
now after the most recent purchase, Roy. Where does Air sit in the ranking in your portfolio? So you're still number 1 is Robinhood right now, I believe.
Yes.
Number 2 is Palantir. Number 3 is PayPal.
Number 2 is SoFi.
Number 2 is SoFi. Number 3 is
I believe it's PayPal and then Palantir.
Okay, so Air is not in the top 5.
No, it might be actually. I would have to look. It's allocating up to 10%. So when I get that done, it'll be the third largest, or probably the third largest position that I have. Of course, it depends what happens with stock price action. It could fall. If it falls to $10 a share, wouldn't trouble me. But it'd be 5% allocation. I'd be like, I'd add, but I wouldn't add like, hey, I'm going to keep it at 10 regardless. And likewise, if it runs, which I think that it probably will, again, this is a second half play from my perspective. I don't necessarily expect a lot until the second half. And so anyway, let me show you this graph, the very simple thesis, and then what happened as far as earnings. So this is looking over the last 5 years. This company's been around basically since I've been alive. And if you go out max, by the way, you're going to see it's like gone nowhere. What changed this momentum was the EV arms race, where they had produced a lot of products around the testing of silicon carbide, very instrumental in EVs, but not just EVs as well. Built up a lot. There was a lot of expectation and it fell apart. Now, some people took issue with that and they say the CEO is a liar and he's a shill, this and that and the other. Don't believe what he says. And if you don't believe him, that's a lot of my thesis right now is this is a long sell cycle. So basically you go from what the CEO is saying as far as like, we are anticipating bookings like this, and there's a credible reason for that happening, very soon. Well, then that goes to bookings where they've actually they've signed the order. They've said we want this amount of product, and we'll look at that little piece there because that was really amazing what was said there. And then it goes to billings because they've actually shipped out the product. They want the money, and then it goes to revenue. So that cycle there can take like 3 quarters. It's not like a immediate thing. It can even take 4 quarters in some cases. Usually it doesn't. So that's just something to keep in mind. What I think is different in this time, it's different. I know, hear that thing is the AI arms race in my mind is extremely legit. And what's happening is these, and it's not just for AI like products, but like especially the data center stuff that they're doing, all of those are becoming more and more expensive. They're becoming a lot more costly as far as the ramifications of downtime. They don't want downtime. They need verifiably very good products. And a lot of people are interested in actually increasing throughput. So for instance, flash memory, DRAM, HBD, those are all things that Air Systems also create systems for to test. And right now, there's just not enough of those. The way that they can increase demand, because one of the big choke points they have is their current testing system is based on like the packaged parts where they take and they stamp out the die cores and they package it with other parts. Then they test the whole thing. And if it's bad, they throw the whole thing away. That is inefficient. It's costly. It's slow. Air can help them there, but they also are helping a lot of people move further upstream. So as long as the AI trade continues, which I think is a long time, I think that this peak right here that we saw, 52.81, that's going to look small in comparison. Now, may not happen as well. They're right next to profitability. They've been profitable in the past. They're not burning money or anything. But what's really interesting is if you look at the comments in this, let's look at bookings real quick. And I do have a chart here. So based on customer forecasts recently provided to Air, this is from the CEO, we believe bookings in the second half of the fiscal year, which starts May 30th. So this is not like forever away, will be between 60 million and 80 million, which would set the stage for a very strong fiscal 2027 that begins on May 30th. Now, that sounds tiny, but again, this is a really small company. Bookings this quarter, Tevis, were $6 million.
Yeah.
This is a more than 10x. Now, this is a second half, so really it's more of a 5 to 6x.
Let me put it this way. We believe our bookings in the second half of this fiscal year will be 60 to 80. Let's say 80. The company's entire freaking market cap is 800. So
yes,
so you guys can like level set that in your mind.
Okay. Now, another really interesting thing is a lot of the conversations that they have, and they'll talk about what I think is happening here. So 50, yeah, I know that's okay. Is what customers are asking and how they're asking it. So this is where Sonoma is pulled up because what we're doing, Intel was using it for high temp operating life, but it's like, well, wait a minute. Can I use that in production? Can you add automation? Can you do these things support? And can you quadruple or 50 extra capacity? So that's where Sonoma is coming in. And there's a couple of places where he mentioned basically what they're able to do as far as units. They're able to basically ship out 50 packaged part units and 50 that operate at the wafer level per month. Right now, they're doing a lot less. That's an insane ramp. These machines, he's put out prices on them. That's around $4 million as well. You look at their current revenue. Now, another analyst asked too regarding that, and I won't go through all the comments and everything, regarding that big ramp in booking. That got a lot of attention. That really is what reversed. Initially, the algos just got a hold of it. The reason why it's up 16% is because people are like, okay, that bookings number is absolutely insane. Now we need to see it, and we will see it this year. If we don't, tap the brakes there. But almost all of it is related to AI trade. And so specifically, one of the things that they also do uniquely well is testing at the wafer level. There's some others that do that. Nobody else has had the breakthrough for the gallium nitride, which is so important in the data center specific side where they're testing on the wafer level. And so there's been some orders, there's been some interest. What's happening here, based on the size of the order, based on the way that he shared that, and also one purchase that was announced as far as the Sonoma stuff at the same time as the earnings, this is a leading hyperscaler, a leading firm, possibly like TSM. Doesn't necessarily have to be. It seems also, so based on that conversation, it seems like they said, hey, we're trying to figure out how many of these you can make. We're going to order a bunch more. And that gave them the comfort to not only say, hey, we think that bookings is going to look like this. They had withdrawn guidance previously because of tariffs. They had not reinstated until now. Now, guidance for the next quarter is not like real exciting. This is more of a second half play, as I said. But man, I think something big is happening here. Could I be wrong? Sure, it's possible. Could Gain Erickson be lying? If you think that, do not invest, because again, this is largely based on his credibility. And I do find him credible. If you look at, by the way, one last thing, I've looked very much in detail over the last 6 or 7 earnings. And when things are not going well, he says that. When there's caution, he's like, I'm not sure if it's going to work out this way. He says that. He's very, very clear, very transparent. He did make a misstep with silicon carbide, but this is a very different animal. So I'm buying more. Effectively, I'm doubling my position. So I still have some more buys to do.
Yeah. It's do they have competition, Roy?
They do. The Teradynes of the world, but a lot of them are lower upstream. So they are, it said, with the individual stamped die cores. It's not as efficient. It's not as effective. They're not testing at the wafer level. They can't really do much with gallium nitride. And these guys, no matter where you're wanting to test in your product line, whether you're using silicon carbide, silicon photonics, or gallium nitride, they cover that, flash memory and stuff too. There's competition. Some competition is misunderstood. So Jacques Treehorn, sorry if I'm mispronouncing your name, you said Navitas is a better move now. It could be, but they're very different. Navitas is probably using Air test systems. They're very specifically building a lot of things for gallium nitride. Air is on the testing side, so that's a natural partner. And based on some comments from the previous quarter, it seems likely that they're using them. Now, they never really can release customer names. Customers can mention that, but they haven't, because if something's working for you, you don't want to put it out there and let your competition in on that. So
where do you think this can go market cap wise, right? Let's say 5 years from now. Or let's say 12 months from now.
12 months from now, this could be a 3 to 5x.
Wow. That's exciting.
And I don't think that's the ultra bull scenario.
Wow. So at this time, January 9th, 2027, we could possibly be looking at Air test systems at $60 to $125, is what you're saying?
It's trading at 26, so 75 plus.
75
I wouldn't,
plus.
issue that as a product. I'm just saying what can happen. The reason for that, micro cap, you look at where the revenue is, you look at those year-over-year comps, you look at what they're talking about as far as the market size. The TAM Gain does a very good job of that, where customers are at. All that requires basically is for that bookings to come through, and I think that they're at all-time highs. And then there's interesting pivots that are happening in the memory, hard drive space, and also even in silicon carbide. Like, they've been very clear that also in the second half, that's accelerating as well. Used to be, by the way, 90% of the revenue. Now it's below 40%. And pretty soon, that's what's going to be really fun is if this does play out this way, silicon carbide, which used to be 90% of the revenue, when it reaccelerates, they'll be like, hey, it's reaccelerated. The market will be like, oh, that's nice. It's a 5% revenue bump because the AI stuff is so massive. But, we have to see it. So there is some risk. This is based on CEO comments. And if you're like, hey, that's not enough for me, do not invest right now. Wait until you get proof. Now, it may be trading at like 40, 45 bucks a share. But if you're seeing the bookings, those materialize into billings and then revenue, that's a very clear target. The neat thing about Air 2 Tevis is since they're followed by 4 analysts. Like, it's so small. And a lot of people don't even think about it. So, yeah. So after news is launched, oftentimes the stock doesn't move or barely moves for hours, sometimes days. I've benefited from that so many times. It's so great. So I'm just saying, like, people don't need to do me and go on margin and go all in on air test systems. It's okay to wait and see, do some due diligence, make sure that you see what I'm saying. If you see it otherwise, don't follow me in this. Because, I mean, if the AI stuff is just a bubble or Gaines lying, this is going to be a terrible trade. I just don't think either of those are true.
I absolutely love to see you this passionate. The last thing we were, this passionate about was HIMS at $13. And that worked out very well, for us. And we can talk about that next. But $75 plus in 12 months, I will absolutely take as a price target, clip it and ship it. And we will revisit this in 12 months. And for those who want to see more, we will be doing a stock tank on air test systems, and we'll be answering all of your questions. Roy will be. I won't. I'll be asking the questions, and we should be doing that fairly soon. So
and like the other note of caution I'll say too is I've been digging in this space for a while now, but as of 6 months ago, it was all new to me. So there's still things I'm learning. Yeah, HIMS. Well, that's actually probably a really good pivot. And let me pull up some of the news that we have on that, and I'll talk through what we do. So the big trades for me, and actually maybe Tevis, you want to talk about the big trade for you too, and then we'll talk about HIMS. I've loaded up on VG. Now I said earlier I'd bought more VG than anything at the start of this year. LNG, I just think is very well positioned with things that I'm seeing with energy demand as well. VG, I really like the vertical integration. I like the modular approach that they have as well. I like that they benefit from the spread, so they're not necessarily just prone to market prices. And then there's more volatility there just because the way that they don't have as many take or pay contracts. There's a different term for that as well, but they can sell at the spot. So I think that they're a very interesting play. So I've been buying a lot. I've shifted from just invest and investigate to this is a long-term investment for me. Now, so between that and air, I want to add more. And I have funds coming in, and I went a little bit on margin, but I'm like, I want to add more than I have money for right now. So do I want to like DCA over the next like 6 to 8 months and get where I want? Or is there something I need to sell? So that's where HIMS is at. And I, by the way, have not pulled up the links like I'm supposed to here. Let me do that real quick. But I'm like, okay, do I just then sell HIMS, which I still like HIMS. I still think second half, it may be very good. I think long-term, it may be very solid. But there's some yellow flags. There's some issues as well. And so we've got 3 of these here. So Tevis, before we go this way, what was the big trade that you had done?
Well, the new stuff was obviously call options on air, which did very well today. And I've been adding more and more to my Amazon spreads, and I absolutely love it. I feel so comfortable holding my biggest ever option position. It's like 5% of my total portfolio at this point. And again, those spreads are for January 2028. So they're going to burn down very slowly. But Amazon's been on a little run here. It's up to 247. And when I first started my spreads, it was at 224, 225. And I added to them again at 232. And so the spreads that I have are 230s to 280s. So $50 of a spread there for January of 2028. And it's 5% of my total portfolio, which is quite wild.
Yeah.
But I think if Amazon goes to, if it does have some good news or whatnot, it's at 250 right now, right? It's just been sort of chugging along. Even if Amazon goes to, let's say 270, or let's say it tops out at 280, and I still have 2 years left on my spreads, I will probably sell those spreads and capture a 35 to 40% gain, and then reallocate into the actual underlying stock or do cash secured puts and buy it at a higher cost basis for the underlying stock, as opposed to leaving the spreads on and letting them sort of bleed away value over time. Because who knows what can happen.
Yeah. So on Amazon and also HIMS, bring this up, please. So Amazon has
Great
begun,
segue.
yeah. Amazon has become, you're just giving me layups, man. Has began selling Wegovy, and here's what's next for Hims. And so basically, Amazon is starting to sell on their platform. It's kind of two different price points. One is for insurance, about $25. The other is for non-insurance. I believe it's $125 or $150. Significantly cheaper than what's available on Hims. And so we have, previously it was a silly sell-off on Hims when Amazon is like, hey, we want to build out a pharma business more. There's a cash-only option, the copay or $149 cash option. So yeah, Hims is at $199 for the cash option only. And then two other points. One is Hims December web traffic. It's good relative to December versus November. Year over year is actually down. And then broad layoffs are happening on the Hims team. There's a couple of teams that look like that they have been sacked entirely.
Yep.
What's going on?
I don't know, man. I mean, if this is not a bottom, it sure seems like all the signs for a bottom. But my concern isn't there, right? It's not, oh my God, there's no, retail YouTubers talking about Hims anymore. There's no bulls left. Therefore, it's a buying opportunity. I understand that aspect. But I just think there's serious, fundamental questions right now with the business. I mentioned this a few weeks ago where Hims at the beginning of the year was offering a differentiated product because they were doing it cheaper and they were doing it faster. And this is why Nova was, suing them and whatnot. And now the competition has caught up, right? Novo and Amazon. It was like $25 a month, man. Like, you know how cheap that is? It's ridiculously accessible for a huge audience. They have distribution networks. And yes, I understand the aspect of saying like, well, at the biggest point of the drawdown after the Novo lawsuit, Hims was at $42. And now so much has improved with Hims with regards to their actual revenue and their product lines and international expansion and the peptides that are coming up and testosterone and menopause. And then Hims is at $32. So it's even cheaper than where it was before. I get that. But again, the market is forward looking. So I think it's cheaper because of these outstanding questions that the market has around the future of the business and the future competitive advantage that the business has, especially in the GLP-1 sector, right? Like the weight loss segment was something that Hims caught a huge bid, rightly so, because it was the biggest single contributor in their actual revenue, right? So especially, before the FDA decisions and whatnot. So again, Hims is similar. Like I sit with Hims where you sit with PayPal, where it's just like, I want to give them a quarter where based on what the management says is coming up. And I think it's timely because it's the end of the year. And so they're going to be providing full year guidance and we're going to see if they can hit their numbers or not. I would not be surprised if they actually miss numbers and if they issue some pretty soft guidance, in which case the stock is going to be like decimated and I'll probably be out at that point. But again, if Hims, I think, can successfully maneuver around this with regards to their future growth prospects, then yeah, I'm just as bullish. But I have been cutting my position throughout the summer and throughout the fall, and I've been very vocal about that.
Yeah, and likewise, if I end up exiting Hims, whether from earnings call or I'm like, hey, I just have higher conviction, which I do. I think right now with Air and also BG, there's some yellow flags. I think they'll still be solid, but I don't know. I think that the thesis is weakened, and it makes sense to concentrate in your highest convictions. Which the other thing too, Tevis, is there's a name. It's shot up a lot. I wouldn't want to buy it here, and frankly, there's some negativity that should have been priced in. This was the alternative gift that I didn't give you, but I was thinking about it. I just didn't own it. I'd written some cash to good puts when it was $38 a share.
Wow.
Figure is one of the best performers year to date, up 32.8% already this year. If you look at it over the last month, it's up 46%. And I think I wrote puts like here. So it was on December 17th, or maybe it was like the next day, December 18th, but right around there. And I was like, man, why didn't I just buy? I should have just bought, but I don't only need it. I've not benefited from it, but man, they're a really strong company. The problem is They built a platform that's designed primarily for HELOCs. They do a lot more of that than that, but there's some pressure from the macro that, let me pull those up as well.
Right.
Specific to housing prices, courtesy of Donald Trump. Like it or not, that's kind of the case. So let me pull that up. But I brought up figure basically to say, like, I want VG at a certain size. It's not there yet. I want to increase air quite a bit. And I do want to get in figure, not at this price point because of the HELOC stuff in part. If it was trading in the 40s, I would probably just buy it. And like, well, where do I get the money? I'll probably have to sell something. So HIMS, I've mentioned before, is lowest down in that chopping block. Now, maybe PayPal, when they do earnings, they just, are like, hey, we're going to be terrible over the next year. All right, that's where I'm going to get the money to buy. Otherwise, I might take some new gains off the table. I'll still hold new, but yeah, it's done quite well for me. So I'm okay locking in some profits. But the HIMS is the only other thing that I see on the table where I'm like, it's a decent enough chunk where I can sell it and use that among something that I have higher conviction in.
Right. Yeah. And for people watching, this is just proof that when Roy talks about something, you guys should be listening, because Figure as well as Air both have done very well. And I think VG will as well. I'm not against owning VG as well.
Are you a Next?
No, I tax loss harvested my Next.
Okay. Yeah. And like same thing for like any LNG play. I do like VG better. But yeah, people ask me, oh, what do you think of Next? Like, I don't know as much, but it's LNG in Texas. I mean, it's going to be fine. All right. So related to the what I'm seeing is one of those pressure points on Figure, even though the stock is acting like this isn't happening. A couple of things related to mortgage. Also, this relates to SoFi, and we can talk about ramifications too. Oh, maybe we'll save that because we're on FinTech Friday. Let's save that for tonight at 10 p.m. Eastern time. So Crypto Rover said President Trump orders U.S. government to buy $200 billion in mortgage bonds, and you can see. I don't know that I want to necessarily read this completely, but yeah, you guys can read it yourself. It's there on the screen. Related, Kobayashi letter. Trump is going after the U.S. housing market. He announced that he's banning single-family home purchases by institutional investors. With minutes, Blackstone stock erased $17 billion at that point. There's a lot more information there. And Trump says Fannie and Freddie will buy $200 billion of mortgage-backed securities to push mortgage rates down as well. So, initial thoughts, Tevis?
I mean, look, I think it's bullish for SoFi, but I quite frankly like it because at the rate that it was going, don't institutions have like 50% of the homes in the U.S., like the residential properties in the U.S. are like 40% or so? It's a staggering amount.
I don't remember the exact numbers, but increased immensely over the COVID time period, like immensely. So
there's two sides, right? Like there's one side as an investor, of course, as a beneficiary from SoFi's perspective, because you have more individuals buying it, and when individuals buy it, they need to take out a mortgage, versus Blackstone can just pony up the money and buy it. But there's also like a common sense, macro piece that I think is good news. Like I don't want Blackstone owning all the property, because then that's going to price normal people out of the market. It's going to keep prices elevated, and it's going to keep everybody on rent, and it's not going to be a great situation. So I think it's just good from that perspective as well.
Yeah. The one negative is if you're a homeowner, fewer buyers means there's not enough buying pressure, which means softer prices. That's really good if you're wanting to buy a home. It's not so good if you're wanting to sell a home, or if you're wanting to get a HELOC, because, trades, usually the amount that you're capped at depends on the actual equity you have in the home. If all of a sudden home prices fall down and you're underwater, no HELOC for you. So it's something that hurts Figure, which I don't think is being priced in. I hope it is at some point so I can get in that company, but yeah.
Thank you, Jason, for the $5. Happy Friday to you as well. Best show on YouTube. I don't know about that, but definitely one of the more interesting ones. Yeah, they also take over key entire neighborhoods.
Yeah.
It's just not like it's not a level playing field. And I think as libertarian as I am, I think the market should regulate itself. But this is one of those circumstances where I think the government exists for a reason to serve as a referee for the consolidation of all of these very finite assets that also serve as shelter for ordinary people. So I am pro that particular piece of news, not only as a SoFi shareholder, but just as a human in general.
Yeah. All right. And then one more related item, and maybe there's others. There's more links that we talked about, but this also, Tevis, look at this pivot right here, talking about housing. Real estate markets are officially live on Polymarket. Predict home values exclusively powered by parcel data. There's others that are looking at tokenizing real estate as well. It's going to be interesting to see what this market looks like and how it evolves over the next year or two. Prediction markets are absolutely wild right now. And so related to Polymarket, they've announced an exclusive partnership with Dow Jones and the Wall Street Journal as well. Any thoughts on Polymarket and what's happening in the predictions market and who this might benefit that we can actually trade?
Which might benefit?
Polymarket.
Robinhood.
Yeah.
Yeah, of course.
Yeah, the more awareness, the more that happens on predictions market as well. It benefits Robinhood certainly. Can't really invest directly for most of us in Polymarket or Kalshi. Now, there's also something very interesting. Of course, this last week, Venezuela. We won't talk about the political side of that as well. But I don't know if you saw this related to Venezuela, the invasion, and Polymarket. Let me find the post right quick.
Yeah, I saw that.
That was absolutely insane. I'm almost here.
There's a couple of crazy things actually, right? Because on that, there's three examples. One is the Venezuela example, where this guy turned 30K into 300K. The other one is a big bet. So people online have been building bots to scrape Polymarket, and they look for unusual activity. And basically, they look for newly created accounts that place big bets and that have 100% win rates. So somebody put a big bet that China was going to invade Taiwan in 2026. I'm like I hope that's not the case. New account, another 30K bet. But there's also an interesting Polymarket account that people are saying is an insider in the Israeli military. They have 100% win rate across all their bets, and all their bets are Israeli military activity. And it's just like this account has won like $250,000 so far on Polymarket. It is absolutely staggering.
And related to that, what happened shortly before Maduro was grabbed by the United States was a massive spike in buys saying that the United States would invade Venezuela on Polymarket. And so, a lot of people were like, hey, we made an incredible amount of money. Now, Polymarket came out and said that they're not going to pay, that it doesn't constitute an invasion. Whether it does or not, one of the things that I found really interesting, back in December, Polymarket made a pivot, and I'll go ahead and close this, where they said, hey, we want to increase liquidity on our platform. How do we do that? We're going to become the market maker. So traditionally with Polymarket in the past, with Kalshi, with Robinhood, with all the other predictions market guys, I believe, except for Polymarket now, all of them are not market makers. So you actually have real people on the other side. Now, some of these are very wealthy individuals that they've basically partnered with and worked with, but they're a neutral party. That they don't care who wins in that bet. They just care about you being able to make the trade, facilitating the platform, and they win just by taking that little cut. So in the case of Kalshi, it's pennies, or Robinhood is pennies. So Polymarket, they made a pivot in December. They said we're going to become that market maker. So now when some of these things blow up and the improbable happens and there's a massive spike, whether it's insiders or not, they actually have a vested interest to rule against and say, oh, well, it wasn't really an invasion. And whether it is or not, I couldn't care less. But it's going to be interesting to keep an eye on this, because at least in my mind, this is the last little bit of separation where you can say it's not just a gambling platform, because they're not the house. They're just, but they are now. You can't say that. And I'm wondering if there's some tailwinds here for the Kalshis and Robinhoods and Forex Exchange and so forth.
Yeah, the entire regulatory framework for this needs to be built out. And I still think just the inherent nature of what you're betting on opens the door for all of this nefarious activity, regardless of whether they pay or don't pay, or the stance that they take with regards to it's gambling or not gambling. It's like this comment said, it's absolutely the wild, wild west of prediction markets. And I'm actually curious to hear your thoughts, right? Do you think either Polymarket or Kalshi IPOs in 26?
Say that one more time.
Do you think either Polymarket or Kalshi IPOs in 2026?
Yeah, I don't know. I'd be very skeptical that Polymarket would. They just got back to the United States, and it would invite additional scrutiny. That was through an acquisition. So I would say no on Polymarket, maybe on Kalshi, but I don't know where they're at in their series raise. I've not been paying as much attention to that recently. So, and I wouldn't invest in Kalshi personally. I mean, it's going to be way overhyped, like most IPOs. And I'm invested in Robinhood, which I think is a layup. I mean, they are an interesting platform, but and they're partnering with a lot of people. But
yeah, this is an interesting comment. How do you even go after insider trading with something like this? It's impossible. I would probably wager to guess that there needs to be some type of task force set up, similar to how the SEC is with equities, and basically they would track, suspicious activity. So all of these accounts that have 100% win rates, that place big bets, like open an account, place a 50K bet, turn it into 500K, and that's it. You could see, I don't know, the wallet addresses, the IP addresses, whatever, and try to figure out who these people are and see whether they have insider trading. You just need that task force essentially set up. But again, to that earlier comment, you don't have that. And until you have that, it's going to continue to be the Wild West. Like, I don't think there's going to be anybody retroactively looking at, prediction markets that have closed to try to find insider activity. Once it closes and the money is paid out, it's closed.
All right. So beyond that, is there anything that you wanted to discuss before we look at Q&A that we missed?
No, I think we covered all the big topics. So far, we're going to save for later tonight. And
while you're tagging things Q&A, flip this over.
Did you want to talk about the defense sector stuff and talk about Palantir?
Oh, yes. I do want to talk about that. That's actually amazing. Let me pull up the
post. So Trump basically put out a post and he was like, defense sector companies can't pay out dividends and they can't do buybacks until they, I think, up production or something to that effect.
Okay. Yeah.
You should have it in those.
Not that one. Yeah. Okay. Go. Well, that one wasn't it. All right. Here we go. Kobayashi letter again, is quoting this. Good to follow for news, by the way. President Trump says executives of the United States defense contractors will no longer be allowed to make more than $5 million unless they build new and modern production plants. Now, he is one man. He can't just, wave a hand and say that this isn't happening, but certainly there can be some influence on future contracts. And so this is something that I don't think is just the defense companies will say, whatever, we'll keep doing all the buybacks and dividends we want. And there has been an immense lag. He's been mentioning, this was actually pretty astute, frankly, in the way that defense companies largely operate, where they've not really invested in themselves and the technology and their manufacturing capabilities, which is really bad for the United States because then you start falling behind. What this does basically is it shifts things even more in the direction of meritocracy. Now, Palantir, started that shift in a lot of ways. Now, here's Evan, his synopsis, spot on. I will not permit dividends or stock buybacks for defense companies until such a time as these problems are rectified. And yeah, this was the same post there. So
hold on. Before we go into Palantir, is there any legal precedent on the government stopping buybacks or dividends?
No.
Like, even if he had congressional approval or I don't even know what precedent there would be for that.
Yeah, I think, the most realistic thing that they can actually do, barring, I wouldn't want to see laws passed on this, honestly, but is just say, hey, if you're just not going to abide by this, we're not going to consider you for future contracts. That would get a lot of attention. Now, There's some that are so important to the United States government that they can't really afford to do that. But there are emerging alternatives. Anduril is one of those most recent examples, but certainly not the only one. Palantir is the name that that I hold that is defense or defense adjacent. They have a commercial product that's growing insanely as well, and they do issue buybacks every quarter, like a lot of the companies we own. They're asked about dividends. I don't think they will. Buybacks are so small, so there's really no immediate impact, even if they change it. They allocated $1 billion towards buyback. Look at their market cap. Look at their PE. It's wild and insane. So yeah, really no impact there. But what's really interesting is a lot of President Trump's push is you need to invest in yourselves. You need to invest in your infrastructure. You need to be able to streamline and build things more efficiently, more quickly, be able to ramp and scale if we need you to. And that's what Sankar has been saying. He's basically the number 2 guy at Palantir and has been all over this for a couple of years, pounding the table. They launched a product. This is not this year, but this is last year. A lot more partners in these, by the way, as well, called Warp Speed, which helps the manufacturing operating system. It's for, some of these are military names. Some of them are commercial names. So it's for nearshoring. If you're bringing your manufacturing capacity to the United States, a lot of that is happening from the tariffs and the threat of tariffs by Donald Trump. You saw a lot of agreements to do that. And also, it's also for companies that are in the defense space that are like, hey, you're right. We need to figure out our manufacturing core, and it helps them optimize. So I think that so with a threat like this, defense companies are not going to say, you know what, let's go with a company that we don't really understand their product, that we're not sure whether it's going to work or not, but it sure sounds good and it's a lot cheaper. They can't afford to do that in the face of something like this. They're going to go with a proven player. Now, again, Palantir is in the defense space. Some of these companies they partnered with as well. And so they understand that the software is credible, it's effective, and how to use it as well. I think this is going to lead to some pretty significant Palantir contracts on the road. Does that mean that Palantir becomes cheap in their multiple? Absolutely not. But this is a pretty big tailwind, I think, that's coming to Palantir's way.
Yeah, I mean, it's an interesting thesis. I agree on this comment as well that said, hey, Palantir is still a winner in 2026. The technology is too new. I think the Venezuela thing just proves that out even more. I sent Roy just this meme, which I found hilarious, and I'll scroll up in our chat to find it, off of the back of the Venezuela news. Oh, by the way, we didn't talk about Venezuela stock market. That was up like 100%, which is crazy. But this is what I sent to Roy, and I had a good little laugh on this. Tony says, this is why the stock trades at 400 times earnings, and this is the testimonial of Donald Trump. We captured Venezuelan President Maduro in record time using this technology. I watched the operation carried out like I was watching a television show. It's an amazing thing. So
this is a meme, but
yeah,
there's some truth. Like the best memes, there's some truth behind. And like realistically, looking at what happened and comments around this, it's pretty clear Palantir technology was involved. Like it's amazingly effective on the government side, like it or not, and on the commercial side as well. And it's a proven thing now. It's not speculative. A lot of companies need that, want that. I think there's some big tailwinds. Now, I don't think Palantir is going to be my best performer. I'm not buying with both fists. I am nibbling like a little bit even here, just because too much Palantir got away from me. But yeah, it's interesting.
Yeah. Did you want to? Right. So we talked about Venezuela. You were gonna show something, I think.
Oh, Venezuela. The oil stuff. There was a
303 billion barrels. What?
Yeah. I was really curious how VG would react to that as well. That I won't talk about the politics of it, but yeah, these two right here are interesting. Okay. Share this. All right. So this is a good post as well. Venezuela currently had 303 barrels crude oil reserves, Oil prices trading at 57 a barrel, making Venezuela's total reserves worth, it's a big number, Tevis, 17.3 trillion. Even for a trillionaire like you, it's a lot of trillions. Even if the United States sells this oil for half of the market rate, that's still 8.7 trillion. In other words, in 12 hours, the United States has gained control of oil reserves worth more than the entire GDP of all countries in the world, aside from the US and China. That's 4 times larger than the GDP of Japan. And yeah, it's an interesting next few days. And then this one as well. Venezuela's stock market, it's actually up larger than that now, but it was up 50% in a single day, 73% at that point since Maduro left. It's up higher as well. It'll be interesting to see how this goes. Now, one thing to note with this, I'm not like an energy space expert. I know a little just because I've been investigating VG stuff. And you and I have a bunch of friends that are in the petroleum engineer field. This is heavy sour crude. So United States largely has light sweet crude, which is great for making gas, not as good for actually making stuff like many of the plastics that we have. And so oftentimes, like we have some heavy sour crude. It wouldn't surprise me if we became even more of an importer of that, especially as manufacturing ramps here in the States. Now, I'm not going to get into politics of all this. But yeah, in net, having more of this on the market, I don't think is necessarily a bad thing for VG, just because those products are used very, very different. There's LNG is very clean. So for instance, SpaceX has talked about like their fuel mixture and what they're doing, using a lot of LNG instead of the more traditional kerosene in the rockets. I believe Rocket Lab is doing the same as well. Now, and then within a lot of the data center type of place, there's a massive need for energy, and LNG is a lot easier to ramp than heavy sour crude is not really going to be used for that. So also China imports a lot of this. So there may be some ramifications as far as hey, if you want Venezuela to sell you oil, we kind of control that right now. Hopefully not forever. I don't want to get too deep in the politics, but
so people are saying there was apparently a press conference today. I haven't seen it. I don't know if you have.
Okay.
But yeah, Trump apparently was talking about structuring the Venezuela deals, and Kryptonite here says the U.S. doesn't get that. The U.S. will be paying Venezuela for the oil.
That's true, yes. I think that those details, those will be advantageous. My understanding, and I've not looked at the press conference, I did see, some comments on that. I do need to watch it. You're right. So definitely watch that before you take anything away from here. But is that money basically is being used to build Venezuela infrastructure. So it's not, the United States is, 15.7 trillion richer.
Yeah. And can you imagine what a green day we would have if that was the case?
I would be torn. But
torn? Why?
The politics, which I don't want to talk about too much.
Understood.
Yeah. No, like if things are up like crazy, then hey, that's awesome. But if it's why it's up, it's like, well, that's I don't like that. So
we're gonna see we're gonna see how it's gonna evolve with regards to Greenland. Another interesting theater. But until that time, we will have Q&A.
All right.
So
if you haven't gotten your question in, throw it in right now. It can be completely unrelated. We'll shoot you. We'll give you an answer. We'll try to answer as many as we can. Sometimes those answers are, I don't know much about that name, or I'm not sure. We're going to shoot straight.
All right. Let's get started. Did you finally sell PayPal to buy Shift 4? No, not yet. There's a bunch of PayPal questions. We'll get there.
Yeah.
Do you have any home builder stock preference?
I don't. Maybe Lennar if I had to pick, but I don't know that space particularly well, and I'm not really interested in getting into it. But yeah, Lennar's. I'm a little bit of bias because who they brought in from Tyson over there, and they use Palantir. But
what if Nike buys Lulu? That'd be interesting.
That would be, yeah.
You think?
But I think as far as, that'd be a good thing for Lulu to be bought out. But for Nike, I think they really need to show that they can create something new and innovative that gets people's attention, like the sneakers that we showed off. More so than an acquisition. I don't know that the acquisition would excite shareholders that much.
Sorry. Trying to bookmark questions, but questions keep coming in. Why buy Nike when you can buy Nvidia? Yeah, I guess. But I mean, with that same logic, then your entire portfolio would be like Nvidia or one name, right?
Yeah,
So
I can't do that with Nvidia as much as I like them, but yeah, I mean, Nvidia is cheap. It's attractive.
yeah. Yeah, fuck it. I'll throw your comment up, Mike. Yeah, we do realize we're not taking all 300 billion of oil. That's what we said.
Yeah.
I didn't delete it on purpose. I'm just the comments keep coming in, and it's the favorite button is like this small. What do you think of QXO's recent bump?
Yeah, I'll be honest, is I need to take some time to investigate and dig into that stock more. Steve gifted it to me, so it is on the radar. I mean, even though it's now more than $100, but he gave me block last year. So it's so nice to not have a company that I don't want to be in, because QXO, Brad Jacobs, I mean, he is amazing. So, but what the thesis is, what that looks like, why it's even run up, I don't know. I've not had time to look into that, so I need to.
Okay. Serious question from Sagig. Would you think it's wrong if Alex Chris starts directly talking about cheap stock PayPal price, and so PayPal's price being cheap, and that it doesn't make sense, or would you think it's manipulation?
I would prefer him not to talk about the share price unless asked. If he's on a fireside chat and somebody asks, or an analyst asks in earnings, fine, fair game. I think that's okay.
Yeah.
I wouldn't want him to initiate bringing it up, like especially in an earnings call, or talking about it on X or anything, unless he does an insider buy. In which case, he doesn't really need to talk, because I mean, the proof is in the pudding. If he's buying the stock, he thinks it's cheap.
Yeah. What do you think about where BMNR is going?
Well, there's a related question that I see in there about the shareholder vote, specifically the 50 billion.
Let me throw that up, actually.
Yeah, I mean, like, it's the price is tied to Ethereum, and Ethereum is not going the direction that we'd like it to have. I think that crypto traditionally has a blow off the top rally, including Ethereum, before crypto winter. I still think that we'll get that. I think long-term BMNR is just fine. I've not sold anything on BMR other than covered calls. So yeah, I voted today. I actually got retweeted by Tom Lee, which was pretty cool. I don't know if
you voted yes.
Yeah, exactly.
People that voted no that got blocked by Tom Lee.
Well, okay, actually, let me. I'll show you this because it's interesting. I'm not like unilaterally bullish or anything like that. So, I said I did the same. 50 billion authorization seems way over the top, but I don't feel like they'll dilute with MNAV under 1. Extremely high number, but I don't think they'll misuse it. I voted yes. And I'm not just like, hey, yeah, everything's great and nothing is wrong and there's no concerns or anything. 50 billion is a big ask. My preference would have been that they came out and they said, hey, we need 5 billion. Still a large number, still a big ask. But I mean, it is their strategy. 50 billion is an eye-popping number, has some people concerned. My personal thought, and this is just for me, somebody thought I was giving it like advice, like you should exit if you disagree with leadership. That's not always the case. But for me, if the leadership is asking for something, they say, we need this to be able to operate correctly, and I am against that and opposed, I might vote no and then exit later, but I'm going to look for the exits at that point. When I'm like, leadership wants something, I do not want to give it, why would I stick around? Here, they've not diluted under MNAV under 1. Tom Lee, talked about the reason for the 50 billion authorization, which was, looking into the future of reverse splits. So with reverse splits, you'd be like, oh, who cares about that? The reason why BMNR cares is because every single time on Monday where they talk about what they bought, the cash that they have, their holdings and everything, they talk about the liquidity in the stock. This is very important for their strategy because they're selling their shares. If it was in an illiquid environment, that would have a dramatic negative effect on the share price, and also they wouldn't get nearly as good fills, versus having a very liquid stock benefits them immensely with this strategy. So that's the reason why they even have, and they mentioned the reverse split. Again, my preference would have been ask for what you need over the next year or two, 5 billion. Then if we get to a point where BM&R is trading at $200 a share, shareholders aren't going to be like, no, you can't have more shares. They'll be like, have all the shares you want, give the reverse split, do the liquidity thing. So, but I still voted yes.
I just, yeah, I mean, I don't, I agree with what you were saying in your X thread, where it's like, hey, like, and even Tom Lee was saying this. So I hate how desperate they're being for this yes vote. Tom Lee was basically like, if you guys vote no, we can't issue more shares and we'll have zero growth. And I also think that's kind of BS. It's like you have $1 billion cash, dude. Like, how about you play within some reasonable constraints? And realistically, that's also not intellectually honest to say that they're going to have zero growth. It's like you can put another vote up for 5 billion shares to be authorized, for 1 billion shares to be authorized. You know, it's not like 50 or nothing. So I just think that I get a bad vibe with regards to how desperate management is for this raise, and the size of the raise is going to lead to them never needing to, well, I shouldn't say never, but not needing to issue more shares in a long while. And to your point, around $200, I think that's the sort of carrot that he'll dangle in the face of retail investors and hope they won't notice that they can just do this vote when the stock is at $100 or $200. They don't need to do it now when it's at $30.
Yeah.
So they're promising the moon and the stars, and I just think that it's a very slippery slope because it allows them this broad sweeping, this broad sweeping authority, and even though they have all of these bonuses and stuff tied to it, I don't know. I don't get a great feeling about it. But at the same time, like, if the no vote passes, I don't think that's good for BM&R shareholders either.
Yeah. Are you voting yes, or do you mind sharing how you voted?
I haven't voted yet, and I'm not sure my votes are going to necessarily make a difference. Like, what I want to do is I want to lean more towards a no than a yes, but I also understand the viewpoint of saying, like, well, why don't you just sell then? Or of saying, well, if you vote no, you're screwing your future self in the foot because they're not going to have that much growth because they're not going to be accumulating more Ethereum. I get both of those, but I'm just worried if I vote yes that it's the wrong incentives, right? Like, they can issue below NAV, they can do whatever. Well, I don't think that they would do that. Like, I still think that management would be responsible, but if I think management is going to be responsible and I have a lot of trust in management, then, like, why would they have such a huge amount of outstanding shares? Like, why not do 1 billion? Why not do 5 billion?
And so, like, the other thing is that there's being voted on. There's 3 votes actually, but one is on the incentive structure for the directors.
4 votes.
There's 4. Okay. But this basically their interests align with ours. So if they start diluting below MNAV, yeah, I'd be like, okay, this doesn't make sense. I mean, like, maybe if they're like 4.9%, they're like, hey, we just wanted to get, that's fine, whatever. Yeah. But like, consistently, I'd be like, okay, that is dilutive and that is bad, and that's not why I'm here. But their incentive structure benefits from share price increasing over time. And so their interests and our interests are aligned. If it wasn't the case, I wouldn't necessarily say I would have to think about not voting yes necessarily. But yeah, here ultimately I'm like, okay, this is part of their strategy. It's a bigger ask than I'd like. I'm going to give it to them. My concern, Tevis, is if it doesn't pass, and that worries me based on comments that I'm seeing from a lot of other people, and also, their desperation maybe is the right term, their engagement of shareholders. It's pretty clear that I think Tom Lee overestimated the response to the ask. But I do think if BM&R was trading at $50 or $60 a share, there would be a lot more people willing. Just people are mad that it's not just. I don't want to be disingenuous to people that are voting no or have concerns, but some of it is because of the share price more than anything.
Absolutely.
So if the no ends up resulting, there will probably be a vote for a lower ask, but that share price might get beat up.
It's a rock and a hard place, man. Right? Like, I just feel a little bit sort of backed into a corner to vote yes, even though I don't want to vote yes, because I know that a yes vote is better for the stock than a no vote is. Right? I just don't know that that holds up over the longer term. I think the rationale is kind of BS around, oh, we need it for stock splits. Why? Most brokers offer fractionalized shares already. And even if we move into a tokenized world, everybody's going to have fractional access. And then at the same time, it's like you can do more votes. It's not like now or never. So it's just like, it's so strange to me. And it wouldn't be as strange if it wasn't for this like desperation online. If you go to BMNR's or Tom Lee's thing, it's just like a gazillion retweets of random people saying that they voted yes. And it's just like, dude, what other CEO do you see that with?
Yeah. It'll be interesting to see how this turns out, but yeah.
Okay, let me ask the other BMNR question. What's your hunch about BMNR after the meeting, up or down? I think it's going to pass, and I think it's going to be up after the meeting. Tom Lee is hinting that it's going to be up after the meeting, saying like you haven't seen, like you have to have patience, you haven't seen anything yet. But I also think that like again, he is incentivized to say those things, and like it's all the cash bonuses that they have too, right? Like if it's I understand he owns a ton of shares, but he's also making like what 90 something million in like cash, and like okay. So, but I think it's going to be up. I think there was another question here about when will we know. I think we'll know on the 15th or near the 15th. So we should know next week, because the 15th is Wednesday.
Yeah.
The voting closes Tuesday at midnight, guys. So that's the last time that you can vote.
Yeah, I think if it's a no vote, it'll be down. A yes vote, it'll probably be up. But the long-term story is if Ethereum is going up, BMR is too. If it's not, I wouldn't be in this.
Yeah, I'm also looking forward to potentially having some Maven updates next week. I'm really excited about that.
Yeah.
So next question. What was the big trade mentioned? Yeah, so for me it was the Air calls and the Amazon spreads. And then for you, Roy, it was 0 DT options.
Yeah, 1 DT options on Apple. That was a small. I had a pretty heavy buy. I added 25% to my air test systems, and I had bought some earlier in the year too. After I did the update on my stock portfolio, it's going to look different and heavier on air. I even went into our margin for that, and also some heavy buys on VG.
Nice. Do you think PayPal can get acquired by someone for a premium to what it trades at today?
Yeah, it's possible. Regulation and regulators seem like that they're more open to mergers and acquisitions too. So, you can ask what companies would benefit. A lot of the big companies, including, many of the traditional names that are sitting on a lot of cash. So it's possible. It may also be I'll buy this and you buy that sort of thing where we've seen some semi-acquisitions. I'm not in it for an acquisition, but it's possible.
Mm-hmm. Why would PayPal go up? What do they need to do?
The thing that analysts look at for the most part is branded checkout. Branded checkout is growing at 5%. That's a problem. That's the PayPal checkout button. Now, unfairly, they have what PayPal is calling branded experiences, which is exactly the same take rate. So I don't know why analysts are so affixed towards just PayPal branded and not looking at Venmo, for instance. Venmo is ramping dramatically. Now, some Venmo peer-to-peer, you're not getting a lot of revenue, but Pay by Venmo It's exactly the same take rate as PayPal. Buy now, pay later, also branded experience. You actually have a higher take rate than PayPal branded. So I'm not sure. I don't know that analysts will just change. They'll just be like, hey, we're going to ignore what's happening there. But they are right. That branded number is insufficient. Alex Chris, said as much in the previous earnings call. And sadly, like they reiterated a bunch of times, but both he and the CFO were like, hey, there's some macro that's impacting PayPal branded as well. So quarter four results will maybe be worse than 5%. Like it's just really not good. So that needs to accelerate. Top line revenue needs to accelerate. And then they also need to show that some of these new products and initiatives are working. Agentic is just too far out for them to like price in anything at this point because Dan Schulman burned a lot of goodwill, not the balance sheet goodwill, but he overpromised and underdelivered. That's typical PayPal. That's not Alex Chris, but the market doesn't treat it like that. So they need to put up and show up soon. If they don't, they'll still be around as a company. They print cash, plenty of free cash flow, immense buybacks and everything. But yeah, that's what's needed to change is that top line revenue growth, PayPal branded, and new products and initiatives working and clear line of sight of what those targets look like.
Do you feel like it's a highly cyclical company? Oh man, I can't remember which was.
I think Air, maybe that's referring to.
Maybe.
I would say lumpy rather than cyclical. So they are selling their products to the like the TSMs of the world, for instance, or the Amazons or the Googles. They so they'll have some large orders all at once, and then once they process that through, so you're going to see some quarters where they just print revenue, and others where it's more modest as well. They do have some residual through the die packs and the wafer packs. Won't go too much into that. Which think of them, I guess, not the same, but like inkjet cartridges, where the more printers that are out there, the more of the inkjet cartridges that they'll sell. Different product, but it's the same kind of idea. So I don't think it's cyclical, but yeah, lumpy revenue for sure.
How long have you been in PayPal, Roy?
May 2023.
What's something that's winning other than Air that you like because the other ticker you're giving off aren't great?
I mean, VG's done pretty well since, been pounding the table a lot more on it over the last month.
Yeah, Figure, Air, VG. I don't know what more Figure, you guys want.
Yeah, Figure is up like, not well, it's not quite 100% since I've been really pounding the table on it. I wish I bought instead of did cash secure puts, but I've been talking a lot about that as well. NVIDIA is more range bound. Palantir's been up actually since I've been talking about it. So I don't know. You win some, you lose some, but a lot of these for me, the short-term price swings are fun and sometimes a great opportunity. Like what happened with Air, where I bought at like 21 something yesterday. Dude, I was like, this is stupid. I'm going to buy a bunch. This is great. I'm even going to go on margin. But that short-term stuff, that's not my concern. It's the long term. I'm looking, 5 to 10 years for most of these. BM&R is the one exception where it's a 2-year thing for me.
Yeah. Zeta, I don't think either of us own Zeta. I made a post earlier today, Roy, around us getting a stock tank episode with Zeta. And so I'm going to be reaching out to Nick, I think is his name. He does YouTube videos, but he's all about Zeta. So stay tuned. We might do an episode on Zeta. That's an interesting one. I know Nick and Elijah.
We may just want one person to pitch, but if not, I have 3 guys that I know quite well that are in all over Zeta. Actually 4. But yeah.
Price targets for Nebius. My price target is $200 for Nebius in 2026. Very bullish, considering it's trading for slightly under $100 currently. Right?
Yeah, I don't have one, but if I did, I'd say $20 after a split.
Oh, okay. It's like what? Are we in Harrow? No, I know. Manuel, I think, is in Harrow. I don't know anything about them other than that.
I don't know what that is.
Surest bet in the next 6 months in each of your portfolios, SoFi is Charles's. Surest bet means least likely to lose money, I guess.
Nvidia then.
Really?
Yeah.
Nvidia? I could see Nvidia being down 6 months from now.
It could, but they're undervalued by a lot right now. Like I feel like I need to start pounding the table in Nvidia, but I mean it's possible. Like any stock can be, but yeah, I'd say SoFi right after that would probably be mine.
SoFi is high up there. I think Meta is also pretty like it's 650. I don't see it in 6 months being in the 500s. I could see it being easily in the 700s. So, yeah. What would it take for you to sell PayPal? I think Roy's already answered this before. It would take a couple of commentary. We should make a bingo card actually for PayPal earnings.
So one bright spot thing is PayPal and SoFi actually report on different days. Thank you, SoFi, for reporting on Friday morning for some reason. But that's awesome. So I can cover both live. So you might see me live just be like, this isn't it. Usually I'll take more time to digest just in case there's things that I miss. But yeah, if it's essentially saying, hey, this is transition year 3.0.
Yeah. I've wasted like I think I wasted like a full 2 weeks when Elden Ring first came out, and then I never touched it again. Roy, have you played Elden Ring?
No, I know that I would love that game and I would play it to death, and I don't have that kind of time in my life right now. So this is one of those where maybe all the kids are moved out and wife is busy with something, and I've got like 2 weeks because she's visiting whoever. Okay. But no, not in this stage of my life. Got to finish up that PhD. Got things I want to do here on YouTube. Got personal things I need to take care of. So, yeah.
VG price target, let's say 12 months.
It wouldn't surprise me to see it trading north of 20, but I don't understand. I'm too new in energy stocks to like take that more than just with a grain of salt. But that's largely derived from people that are in the field and what they're saying about this, and people that have done a lot more studying than I have on VG as well. I think, like the classic LNG play is ticker symbol LNG. VG, I think, will have a higher market cap maybe within 5 years of where they're at. And they're going to grow too. They're going to do fine.
Thoughts on Marble?
Yeah, I mean, they're in the right space. I don't know much about the individual company though, so
I don't know anything about them. Yeah. Still convicted on Nebius, absolutely, more so every week, honestly, with the news that's coming out. And I think they're going to do very, very well. I think they're undervalued relative to their prospects. Again, in a couple of weeks, I think we should be getting some news around the new data centers. Nate posted something recently that they were even hiring in one of the data center locations. So like the clues are there if you want to follow them. Yeah, here. Take a look at this. Construction project manager data centers in Alabama. Wait a minute. Is Alabama what we're expecting at the end of January? No, it's not. We're expecting Missouri. And so there's multiple data center prospects, let's say, that Nebius is pursuing that I don't think is being priced in by the market right now. Not at all. And so once those approvals are through, and once construction starts and the press releases are dropped, and once we get who the clients are on the other side of those deals, I think that is going to be definitely pumping the stock a little bit. Again, one of my predictions is that Google is going to be in a partnership with Nebius later on in 2026. We'll see if that comes as true or not. I could see Amazon also doing the same, but I think Google is more likely. But yeah, I think Nebius is going to do very well. I make weekly videos about it, and we need to get Roy into Nebius, and that's all that's left, really.
Yeah, it's ironic because I was the first one in, but as the investigate, I'm like, I just need more NVIDIA right now, and so I did that. even thinking NVIDIA might outperform, but my stocks are so high beta. It was the right thing for me, even if, I would have benefited much more from being in Nebius. But I do see it with Nebius. I think they're a very good company. They're positioned well. They're not trading cheap, but I don't think they're expensive either. So I have a small list of stocks and companies where I'm like, depending on where cash is and what the company is doing in that share price, any of those could become a position in 2026. Now, not all of them would, but it wouldn't be surprised if 2 of them are. Figure is probably at the head of that list. And then the very next one would be Nebius. Rocket Lab's also up there. It's rocketed away from me. I wouldn't buy it here, but yeah.
Yeah. I'm going to pause bookmarking new questions, guys, because we haven't moved from that 25 to 30 mark in the last 20 minutes because you guys just keep asking while we're answering. So we want to get through this in the next 15 minutes, I would say. Thoughts on MP? Do you have any?
I mean, they're I don't know them well. I know that it's rare earth and that they're up really big after Venezuela. I think that's on speculation that they may be able to go in and benefit from what's happening in Venezuela, whether you like it or not. But yeah, I don't know enough about it. Sorry.
Yeah, I don't follow MP materials nearly enough, nor do I know the space. What are we buying next week? I'm buying more Air.
Yeah, Air and VG.
That's interesting. Yeah, Air is a very small position for me, so I'm definitely gonna listen to Roy when he's this bullish, and I got to listen to the earnings call and learn a little bit more about Gain Erickson and the entire team at Air, and just see how I like it. But that's gonna be something that I'm absolutely buying next week. Do you think Snapchat could successfully monetize? Maybe they were just playing the long game. It is really cheap.
I don't think it could ever hold Snap, honestly, but it is cheap. There's potential there. I just don't know if there's execution. And always a big thing about my thesis is leadership. So, yeah.
Yeah. I don't follow Snapchat. I would say that the impressions or the stickiness of those impressions is pretty key. Snapchat is not one that I really want to, own. I think the monetization piece has sort of like loomed over them for a long time. Technology, actually, the users is pretty. They have a pretty big user base. I think it's like 400, 500 million users, something like pretty large. But yeah, I mean, if you can't monetize those users successfully, or to the degree that Facebook is, then you're not going to be. You're going to trade for what, single digits is last time I checked where they were.
Yep.
Roy, can you clarify a bit more on Air CEO's comments on the revenue 10xing in the coming year? How likely do you think that is?
Yeah, let me throw up that so you can see the context. I did see that question, so I want to be ready. That was one of the things that was interesting. So right here, yeah, here's the 4 to 5 million per machine. So questions on how many you can make. Okay, use your hands. Okay, so can the AI business be? Well, actually, let me just read this. I'll blow it up a little bit more. Well, let me go back. Sorry, guys. Right there. Single processor for some of these big guys at the wafer level burn-in is 20 to 30 systems or so. These are 4 to 5 million machines. And that's, I mean, just do the math on the bookings. That's what's happening, is one of the big guys is coming in hard. So you get a feel for the size of what that looks like. And the estimates today, if you're looking at AI spend and test between test and burn-in, is 8 to 10 billion, maybe 15 billion or so. I mean, it's a really large number. So we don't want to get ahead of ourselves here. This, by the way, is not a winner-take-all place. There's multiple winners. But when customers ask you things like, how many can you make? Use your hands. Okay, so can the AI business be measured in hundreds of millions of dollars and for our test systems a few years out? Yes, for sure. This isn't a like maybe, possibly, we think so. I mean, he said it that directly in the earnings call, and usually CEOs try to avoid that sort of thing. So,
yeah, very bullish.
And that's, by the way, that's just on the AI business. So they're more than that.
Yeah, and there's a bunch of bear questions here, so I'm sure it's going to come up again. Are you giving HIMs this year to prove themselves before selling? I'm giving HIMs a quarter to prove themselves before selling, and mostly a quarter because I'm going to get yearly guidance for what this year is going to look like. So, yeah, we'll see what they report. Normally, what percentage of your portfolio is cash? Do you recommend raising cash right now due to the macro uncertainties?
Myself, I usually keep it pretty low, under 5%. And there's a lot of times where it's like 0%. I usually have cash coming in every 2 weeks. And sometimes I'll have a large amount, which is coming next week, which is nice at the beginning of the year. A lot of times it's just smaller stuff. So I rarely raise cash, for that. I'll sometimes hedge if I'm concerned. I'm not right now. I rarely will sell out positions just because of concerns and worries. If I'm concerned about an individual name, I'll sell that. Otherwise, it's I'm not going to try to time the market. I'm not good at that. That's not my thing. And I don't think most people are. I'd rather invest in quality companies over the long term. Because like classic Liberation Day thing. Like if I was going to try to time that, I'd be like, I'm out, and then all of a sudden we invert and we're back to the moon, or COVID. It's like everything's melting down, the world's ending. We know what happened with the COVID rally. So, that's just where I'm at.
Yeah. Why do we get no white boy representation in Vegas? I'm assuming they mean the BM&R conference. I didn't get an invite. If I got one, I would have definitely gone to Vegas for the conference.
I think it's CS and the NVIDIA invite.
Or that too. And in that case, we did get white boy representation. You got Tanner, you got a whole bunch of other creators.
Yep.
Buying Nebius, yes, absolutely. SoFi to $69. Eventually, yes. Roy, cats or dogs?
Dogs.
Yeah. Air's biggest competitor?
So I've thrown up. Oh, I haven't shared it. They're not a monopoly, no. No, some of these names I'm not familiar with at all. Teradyne is probably the biggest. You can see the market cap there as well. Advantest is another one. I don't believe they're publicly traded. Maybe they are on the overseas markets. There's another big one over in Japan as well. A lot of these will specialize in just be based on volume, but a lot of it again is further downstream than what Air is trying to do, and they don't do the wafer level test at all, and nobody does the gallium nitride wafer level test. That was a really difficult problem for Air to solve. And what creates a moat, well, there's several things that create a moat, but one of those things is if you solve an incredibly difficult problem that you're not even sure that is possible, it's hard for others to follow behind. Now, it doesn't mean that it's impossible, but yeah, they're positioned really nicely. There is competition for sure. And actually, one of my concerns with Air is they may get bought out by one of these guys. Now, that's still a good thing for shareholders, but it limits the gains that I think there's a decent chance of happening over the next few years.
Yeah. No, I think a buyout, especially considering the 800 million market cap, I think a buyout is very much on the cards for Air.
Yeah. Especially like they bought out Incal and just consolidated that last quarter. And that was a really smart thing. It basically filled a hole in their ecosystem that they didn't have. So if somebody wants like a whole suite of testing system across those 3 different platforms, and actually even more mediums as well, it's attractive. What wouldn't happen though, by the way, somebody like a TSM is not going to come in and buy Air just because their competition isn't going to want to be using the same product. It's kind of like what happened with SoFi and Galileo. We're trying to sell that product to banks. It was a hard sell because it's like, do we really want to buy competitor technology?
Mm-hmm. Yeah. Is it too late on Air? I think that the answer to this is obviously no, considering you have a 3 to 5x price target in 12 months, but you can answer.
Yeah, it's a $800 million market cap. So, and we talked about the revenue, like really the bookings, which will translate to billings, which will translate to revenue. It's like, no.
I think they're asking, is it too late because it moved from $22 to like $26? So missed the boat. Sorry, man.
So Air, like it was trading, like it's easy to do that. And I've made this mistake on names in the past where it really runs hard. And I'm like, oh, it'll come back. Well, I mean, Air was trading at like $7, around Liberation Day, actually under $7. And I could have been like, man, it's up so big. And I was looking at it in the 12s, and I bought there initially. Said it's up, like almost 50, almost 100% for where it was. I'll wait for it to fall. I didn't want to wait. Like, investigate, but if you see a name and you're like, hey, there's tremendous upside, but it's trading 10% higher than you'd like. Well, the upside potential is like a 4 or 5x. You buy that anyway. Now you can DCA, you can do a lot of different things, but yeah, I'm even here, like I'm making some buys next week on Air. It's trading at $30 a share. I'm going to buy more. Now my buy will not be as big as it would be at 25 or 20. And I'll slow it down a little bit, but yeah.
Trump just issued a statement that he's capping credit card interest at 10%. I'm sure we're going to talk about that later on tonight, but again, name me something that's not going to hold.
And he wants to keep the Supreme Court busy, I guess.
Yeah, I mean, I think there's some other countries I could think of that he would be great for, but things move slower in the US and A. To the Canadian, do you hold Enbridge? No, I do not. Thoughts on Intelia?
Yeah, Intelia, yeah. It's a biotech name. Gene, what is his name? He's the guy to follow on X. You can message me or tag me, and I'll put his name out there. But he's been all over this name for a long time. I don't understand enough about this naming space. I did some studying. I'm like, I don't know. But this is one of those CRISPR names. Looking at where they're at as far as FDA and approvals, I mean, the stock price is heading in an upward direction for a reason. But biotech is you either make a lot of money or it goes to zero.
Yeah. I don't want to invest in biotech for that reason. They live and die by the sort of FDA approval, so not for me. What do you think about the Discord IPO? Any interest there?
I'm not really looked into it. I don't really use Discord that often either. A lot of people are. I think it might play out similar to what Reddit was, where I underappreciated what Reddit had, the kind of moat that they had, the value of the data that they have, and having like real human eyeballs there, not just AI slop.
How they make money is different, but
yes.
Yeah, I'm not really interested in Discord's IPO, frankly. Indiana going to win tonight. I want to bet 2K on Robinhood predictions. I lost 1K betting Ole Miss last night. I have no idea who Indiana's playing. I've been so out of the sports betting world ever since I left on my trip a couple weeks ago, so I haven't even opened my DraftKings. But so I don't know. Is there SoFi Weekly tonight? Yes, SoFi Weekly is in 2 hours.
FinTech Friday.
FinTech Friday is in 2 hours, and we'll see you there. Any thoughts on silver?
Yeah. So I had a lot of physical silver, and I sold a bunch of it at like 30, 32, 33. It's like $80. Part of it was to settle some debt and keep our debt level the same amount when we were buying not just one, but 2 vehicles over the last year and a half, 2 Teslas. Silver had really not gone very far. I still have some physical silver. I'm not planning to sell it. The one thing though I'll say is it should have been obvious to me of what was happening with silver, just because a lot of the mined silver is being used in industrial products related to AI. The part that wouldn't have been as obvious to me, because my mind just doesn't think that way, is a lot of central banks are moving and acquiring a lot of precious metals too. And then whenever anything runs, there's always traders and stuff. So there's probably higher upside potential in silver. I'm not really going to follow that trade. I'm not going to buy more. I'm not going to sell more. I'm just going to keep what I have and be glad that it's not in the 20s perpetually.
Yeah. 6 questions left. I apologize for not bookmarking the rest of them because we have to go and we'd be here forever. How do you guys feel about XLE in general for the next couple of years? Energy dividend stocks seem like they're in a good spot, being generally flat for the past few years.
Yeah, that's energy ETF, but I don't know all what's in it. So I don't know enough. I would think, like you, not knowing what's in it, energy does seem like a good place to be in. There is some pushback on the other side. I saw Perplexity's CEO, for instance, say that he thought that a lot of the inference, which is currently done by data centers, could be done on device. So talking about your iPads and your phones in the future as models become more efficient, as these become more powerful as well. If that's the case, energy demand will not be as high as forecasted. It would be a very good thing for a lot of Americans because all of a sudden you have a glut of energy and really nice energy prices as well. But if you're in the trade, that could be very bearish. I don't think that's likely, but I even talked to someone I'm related to that's in the space, and I said, "What are your thoughts on this?" And they said it's just too early to tell. So,
yeah, I mean, look, I think if you want exposure to energy and you don't know any individual names like me, I think going in the ETF will definitely give you that exposure across the board from a macro perspective. I don't own any energy stocks, nor do I really want to go deeper into energy. And I guess to that note, we got a question about Enphase. What do you think about Enphase after it landed 2 TPO after earnings call?
2 TPO. I guess I don't know what happened there. Yeah, I've not. I'll follow Enphase typically, but I've not looked at it in like a month, and I've been in the desert for a good bit. So yeah, I'm not sure. With solar, it should be a similar layup. The problem is there's political headwinds right now. I will say things might change for Enphase because the market is forward looking, depending on how midterms go, but that's in November. So I'm not touching it here. I do like leadership and management. I do like the company. I do like the product, but I'd rather just be in VG. I think it's easier.
Mm-hmm. Okay, next questions. Just a few left. Talk about drones. You knew anything about drones? I don't know anything about drones.
On that, I hear a little bit just because of their being a Palantir. They're using Palantir technology, but RedCat and Ondas. But I don't know. I know drones will be big, and I think that's easier to see than like eVTOLs, for instance. So if I was forced to invest between one of those two spaces, it'd be in drones. But I don't know what I'm doing in that space. I don't know it well.
Won't Nebius still have to pay for the CapEx in order to keep expanding, which would affect free cash flow temporarily further down the road? Yeah, absolutely. But the market is forward looking. So it's still a bullish catalyst because once that new data center is built out, then they would be able to reap the rewards for years down the line. And they would take on more hyperscaler deals. So it's not necessarily like you shouldn't be worried about the investment that they make, because every investment they make, even if it includes dilution from a CapEx perspective, it's all with a client on the other side of the deal, right? So it's going to show up in terms of the booking, the ARR and the revenue, and it's going to be good for the business to keep growing. Like you can't be worried about building new factories because it's going to cost money, because like that's how you grow as a business, right? So the market looks past those types of things being a forward-looking vehicle and rewards that level of growth. And this time, with regards to Missouri, with regards to Alabama, and potentially Indiana as well, these are not priced into the market right now because they're still speculative. They're not approved by the respective city councils, number one. There's no press release, number two. We don't know who the clients are on the other side of the deal, number three. And there's different choke points where this deal can fall apart in this build-out phase. The build-out, we're in the permitting, right? Like it hasn't even started yet. And so I think that's the alpha that you have. That's the advantage that you have. Once anything is announced, of course, everybody knows that there's going to be a cost associated for the build-out phase, which would negatively affect free cash flow, but they're still bidding up the stock because it's a positive catalyst to have.
Yeah, and Taco has a follow-up comment there that I think is worth pulling up too. But in essence, the differentiation between CoreWeave and Nebius, and both should be fine or terrible, depending on how that trade plays out. CoreWeave rents and Nebius owns. So I like that about Nebius more. And that can help with pricing power, efficiency, a lot of different things too. So
I think you have that backwards because Nebius rents. Nebius owns in Finland, and potentially in the new data center in Missouri, but the rest they've done through in partnerships with others.
Oh, I guess I didn't know that.
Thank you, Matt. Not doing that.
Matt, I've been buying more VG, so let's go. I still, it didn't happen over a busy Christmas schedule, but I'm hoping to have a long chat with Matt that'll be, an interview type of thing on VG, because he knows a lot about the space. He or Chris Patel, I think, are excellent guys to follow. Matt's in the field with UDOC. Chris, more of an investor mind, but he's brilliant. So, yeah.
Mm-hmm. Overall thoughts on Hood, still bullish? Yes. Prediction markets are going to be big.
Yeah. Throw this up. This is actually my pinned post, is Robinhood. And I talk about basically the opportunity. And the one thing that I'll say, well, okay, so there's a lot of different things I say. Predictions markets, what you said, they have the acquisition, which will mean that they can actually back in their own predictions market. Right now, they're splitting revenue with Kalshi. Kalshi gets a cent, they get a cent. Effectively, this gives the potential with Susquehanna and that merger and acquisition, that partnership of doubling their revenue at the turn of a switch. Depending on what that agreement with Kalshi looks like, they've not expanded this internationally. International expansion is getting new. I made one mistake. ISIS have not been launched, but they launched soon. That makes the UK launch. Real tokenization helps international growth. They've had some acquisitions that'll fuel that as well. Retail participation is trading the right way. And the biggest thing is Robinhood going to stop launching new products that the market doesn't even know what to do with, that ramp immensely and are very credible in 2026? No. They have, their moat is their speed and their execution. And even if they said, hey, let's not do anything for 5 years, they're still that far ahead, I think. So, yeah, it's easy for me to be along, even though I think crypto winter will hit and hurt the stock price. I'll just add at that point. So,
yeah, they're going to do very well. Final question of the night, ladies and gentlemen. What do you guys think is your most speculative / riskiest holding, if any? I would say HIMS for me, simply because of the unknowns that exist with the stock. Yeah, that's probably the number one thing I would say.
I just saw the next comment, but probably air test systems. I think right now I'm not holding too much as speculative, but it's hard for me to say with a straight face that a company that has a market cap of under $1 billion is not the most speculative, especially when a lot of the thesis is based on comments from a CEO, not even actual bookings yet. So yes, there is some risk there. Outside of that, it's hard for me to see much risk in anything else. Probably HIMS would be number 2, just because I'm the yellow flags that we talked about.
Yeah. Matt says, Happy New Year, lunch soon to Roy, Tevis not invited. So this is how I get treated. And then Matt will come on and complain about how he's treated. So just so you guys know, this is very much a two-way street. Can SoFi CEO Noto finally join an interview? I don't think it's ever going to happen, guys. We have to let that dream die.
Yeah, Matt, I'll reach out to you. I guess, Tevis, if you want to fly down to Houston, you can and join us. But yeah,
bro, I offered to fly down for lunch, and at great expense to myself, might I add. And Matt said, Tevis not invited. You know what I'll do? I will force Matt to buy my ticket and my lunch with the SoFi money. So just for that comment, Matt is flying me out and buying me lunch.
Yeah, you won that, right? SoFi to 25, yeah.
Yeah, I mean, I asked him if he wants to double or nothing, and he's chickened out all of a sudden.
All right. Well, tickets on Matt money then.
Exactly, tickets on Matt money and lunch on Matt money as well. So thank you everybody so much for watching the Bootleg Weekly on a Friday. We will be back on Tuesday at 6 p.m. Eastern time. And we have FinTech Friday starting up in just an hour and a half. So go grab some dinner similar to how I am, and then join us at 10 p.m. Eastern on whatever channel you're watching this right now. And we will talk about SoFi. We will talk about some other fintechs. And thank you. Thank you. Goodbye.
Thank you,
See you
guys.
Tuesday. Actually, see you later tonight.